the market is getting more discerning.
You're starting to see a bit of a broadening.
There's some durability behind this.
The technicals in the equity market are extraordinary.
The direction from here is really what's the next positive surprise?
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, stocks bounce. President Trump extending the ceasefire after vowing not to. Tehran indicating Washington might be ready to lift its blockade, just as elevated energy prices are pushing United Airlines to cut its outlook, pushing Lufthansa to slash 20,000 flights.
This is huge, Jonathan, in terms of the crisis is now starting to become a little bit more uncertain for companies as they start to guide for the future, because right now we are in a state of basically paralysis, in limbo. The ceasefire talks right now are on hold. The president put out a statement, but interesting to that statement, he's waiting for the Iranian response, and he didn't give a deadline. When has he not given a deadline?
Investors want to make something really complex very, very simple. There is a path towards escalation, there is a path towards de-escalation, and it appears, at least for now, the president is committed to a path towards de-escalation, and the market at the moment is anchored around that idea.
Yes, the market is anchored around that idea, but at the same time, on the ground, the Strait of Hormuz is still shut. And actually what is happening right now is you see some headlines coming from Iran that not only do they go after ships, they're now starting to take hold of some of these ships. At the same time, the Treasury Secretary yesterday doubled down on Twitter and said, we are going to go after any sanctioned crude, and we are going to go after all of this oil. And that potentially means we could see more tension in these waters.
This from the Treasury Secretary in the last 24 hours. The United States Navy will continue the blockade of Iranian ports. In a matter of days, Cargo Island short storage will be full, and the fragile Iranian oil wells will be shut in. The pressure continues to build.
The pressure continues to build on this regime, especially economically. They are in dire straits right now. And although about a month ago, Treasury decided to unsanction the Iranian crude at sea to help some of their partners in Asia, that is not happening anymore. And they are going after the ships like we saw happened over the weekend. Does this mean potentially it is enough to bring them to the table? Right now, it doesn't look like it.
We mentioned the airlines. We'll be talking about them all morning. Bramo is going to catch up with Scott Kirby of United Airlines later on this morning. Look out for that around 9:15 Eastern Time. We're tracking the ripple effect, the consequences, the fallout, starting in Asia, follow through into Europe. 20,000 flights cancelled at Lufthansa. And you'd have to imagine a few other airlines aren't too far behind.
This morning, also, we heard from TUI and what they have to do in terms of basically suspending revenue guidance for this year because they don't know how to guide, because they don't know how much all of this is going to cost, because we do not have a resolution on what is going on in the Gulf.
Equity futures this morning just about holding on to gains. We're positive here by 0.5%. Coming up this hour, we'll catch up with Kennon of Clear Harbor Asset Management. With the equity rally looking to get back on track, Krishna Guha of Evercore on Kevin Warsh's showdown on Capitol Hill, and Bank of America's President of Retail Banking, Holly O'Neill, as the consumer shows signs of strength. We begin this hour with our top story. President Trump extended the ceasefire with Iran indefinitely. Joining us now is Bloomberg's Jumana Basechi. Jumana, the president says leadership there is fractured. How united is it this morning?
Well, we haven't had an official response yet from Iran vis-a-vis the ceasefire announcement that President Trump made yesterday. And I think it was interesting that, these Islamabad talks, we spent all of yesterday speculating as to when they were going to happen, when J.D. Vance was going to leave the U.S., but then we got no official confirmation from the Iranian side that they were going to attend. And what we do know, if you piece together the various commentary that have come through from some of those key officials in the last 24 hours, the key sticking point from their perspective is the ongoing U.S. naval blockade. And even when Trump made that ceasefire announcement yesterday on his Truth Social post, he also said and reiterated that the naval blockade was going to stay in place. And the only comment that we can go from this morning, overnight, is a post that the Iranian Foreign Minister Abbas Araghchi put up, saying once again that blockading Iranian ports is an act of war and thus a violation of the ceasefire. So it's become very clear that in order to proceed with the sequencing, i.e. to proceed to another round of talks, the Iranian side are maintaining that they want to see that U.S. naval blockades lifted. And they're certainly trying to push that narrative forward. There was a lot of state media reporting today suggesting that some signals had come through from the U.S. indicating that they were willing to lift the U.S. blockade. So far, we have not had any confirmation that that is the case from the U.S. And if anything, this morning, as you were just talking about, there have been multiple episodes of IRGC reportedly firing at a a container vessel that was passing off the coast of Oman. Just in the last few minutes, Tasnim are also claiming, this is state media, that Iran has now seized 2 ships for violations. So this really underscores the danger. At the same time, if you look at the traffic of passage going through, it's really trickled down to low single digits. And so if you put all of this together, yes, we have a ceasefire. It is an obscure ceasefire because we don't know what conditions it's linked to, but it's not a long-term resolution. We don't know if there's going to be another round of discussions. And for all intents and purposes, the strait is still effectively shut and still dangerous.
Jumana Basechi and Dubai leading our coverage. Jumana, thank you. Just to pick up on that news report from Tasnim News Agency, the semi-official news agency in Iran, we've received some sign they're ready to break it. And as soon as they break this blockade, I think the next round of negotiations will take place in Islamabad. The market clinging to that story, that report early this morning.
Yeah, clinging to that. But that is not what we are hearing from the President of the United States or the Treasury Secretary. Actually, what we're hearing is that they are doubling down. Now, a few Iranian ships have gotten through and they turned off their tracking devices. But I don't think this is bullish this morning when Tasnim is also saying that Iran seizes 2 ships for violations and the IRGC transferred those seized ships to their coast. If you are on top of a vessel and you are a company, are you going to let your people through? Are you going to say, yeah, we have the confidence in this? I don't think so.
Brent crude 99.60, WTI 90.61. Here's the view on Wall Street this morning. Aaron Kennon of Clear Harbor Asset Management writing, what had been a clear value-driven market has at least tactically pivoted back towards growth leadership in the wake of geopolitical stress. Aaron joins us now for more. Aaron, good morning. Good to see you.
Good morning.
Let's talk about that stress. You've got good versus bad and better versus worse. No doubt, without question, the situation in the Middle East is bad. It is not good. But is it getting better? And are you confident it won't get worse?
It's challenging to make that assessment. You know, if you go back to 1 year ago, we're dealing with tariffs and Liberation Day, and you could game theorize around the decision of one individual, the president. And today, this is multivariable. This is not just a decision by the president of the United States, and we don't even know who the decision makers really are in Iran. And so it's making it really challenging. With that said, the VIX is below 20. Equities are buoyant. We've seen a shift back towards sort of the growth narrative and on the equity side here in the United States. So there's a good deal of optimism built in, and earnings are kicking in and looking reasonably strong.
Well, let's go through those pillars. It's important. Financial conditions are easing. The outlook for earnings is improving. The data's been better than expected. Is that enough to insulate the bull case right now? Is that something you really want to fight?
Well, it's challenging. Clearly, the market has their eyes on those variables, Jonathan. And we're starting to see earnings come out. They've been relatively strong. There's a little concern among consumers, but there's been great strength across financials. The hardware side of technology has been super strong. We're going to see IBM report later today, so we'll get a little bit of a read on that. And I think investors are looking at the rise in consensus earnings, which have only been trending upward throughout this crisis. Double-digit expected annualized earnings for the S&P 500 this year. Who would have thought that just a couple months ago?
Driven by just a handful of companies. When you see that, do you see concentration as a feature or a bug?
Well, I think clearly if you take a look at the 2 companies that make up about 60% of this improvement in anticipated earnings, Micron, so read memory chips, and ExxonMobil, read higher oil prices and higher revenues. 20% of our oil, nearly 20% coming through the Strait of Hormuz. We just talked about Lufthansa. We have huge jet fuel concerns in Europe this summer. How's that going to impact consumer travel? How's that going to impact, sort of transcontinental travel, consumer consumption, investor sentiment? So lots of uncertainty right now weighing on markets, but markets remain relatively buoyant and hopeful.
Given where we are today, can you make a call on any of those judgments about jet fuel and where some of these companies are going to be?
It's really challenging, but I think the experts seem to think that if we continue to have these supply bottlenecks, in about 3 weeks' time, the European Union has been getting together and meeting on this topic. We're going to have significant rationing, not just in Asia, but specifically in Europe. You're going to see flight cancellations. You're going to see sharp spikes in ticket costs if they do fly those planes. It's going to be a big problem. This is not about price. It's about availability of product.
If that is the scenario in a few weeks' time, what does that mean for markets in the United States?
Yeah, I mean, I think something has to break clearly in the not-so-distant future here. And I think We'll have to see where this sort of fog of war, whether or not it clears or whether or not it doesn't. I will say the three big bullet points for the president at the outset, it seemed to be, we have to reduce their ballistic missile capabilities. We have to consider regime change, but maybe not boots on the ground. And, I think the other one, of course, is what are we going to do with this enriched uranium? We need to remove it somehow from that country. One box has been checked, but not all three, and it's a ballistic missile box. That's a problem. And it leads me to think that maybe markets are a bit too optimistic here going forward.
And this is a sticking point in negotiations as well when you see the reports from the Iranian side. The pushback from them ultimately is those objectives weren't achieved through military means. Why should we give them up now?
Exactly. And also for the Iranians, why should they give up the one piece of leverage they have right now, which is the Strait of Hormuz? And when you see some of the kinetic features of this conflict, it is the IRGC right now that is having those gunboats go over to those vessels. They're the ones that are in charge right now of Iran, not the political actors that are meeting with, say, J.D. Vance or Steve Witkoff.
Aaron, you've got options. You can hide in cash, just steer clear of everything, or you can make that tactical call just to hug the more growthy parts of this market with the secular tailwinds behind them. What do you want to do?
I think we're doing a lot of different things at Clear Harbor. Most of our clients, we have multi-asset class portfolios. Within equities, however, take a look at, sort of the growth orientation of, companies outside of AI and the compression of price to earnings multiples that we've seen over the last weeks and months. There's opportunity there, we believe. You look at 10, 15, 20% annualized growers outside of this sort of SaaS concern. Look at sort of robotics within the surgical community. As an example, we had Intuitive Surgical report yesterday. Very strong report from Intuitive Surgical. I mean, that is not, they're leveraging AI, but those types of growth, secular growth companies, we think are very well positioned. And it's not just within healthcare, it's across the technology landscape, it's across consumer discretionary. We're seeing it also in some areas of energy where there's opportunity. But we're allocating to alternatives, we're allocating to fixed income. We have multi-asset class portfolios at Clear Harbor.
Aaron, appreciate your time. Yeah. As always, thanks for being here. Aaron Kennon there of Clear Harbor Asset Management. If you're just joining us, welcome. Futures holding on to gains positive by 0.5% following the first back-to-back losses of the month so far on the S&P 500. With an update on stories worldwide with your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Iran seizing 2 ships for what they're calling violations. Tasnim, the country's semi-official news agency, saying the IRGC transferred the ships to Iran's coast. The ships are reportedly from Panama and Lithuania. President Donald Trump extending the ceasefire with Iran. The president making the announcement in a Truth Social post after planned peace talks fell apart. It came just hours after Trump said he was not inclined to extend the truce. And a small group of unauthorized users gaining access to Anthropic's new Mythos AI model, which the company warned could enable dangerous cyber attacks. According to documentation viewed by Bloomberg, users in a private online forum obtained access on the same day Anthropic announced a limited test release of the model. That's your Bloomberg brief. John.
Yahara, thank you. Help me make sense of this. It is either one or the other. Either it is so dangerous that only approved users can use it and access it, so we're being really careful. Or it's not that dangerous and we shouldn't be concerned that unapproved users have got hold of this. Which one is it? Because it can't be both.
I think the U.S. government is trying to figure that out right now as we speak.
Right?
Yeah.
Kind of crazy. Up next on the program, Kevin Warsh on Capitol Hill.
The president never once asked me to commit to any particular interest rate decision, period. And nor would I ever agree to do so if he had.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Let's get rid of this investigation so I can support your confirmation.
I got a feeling that label was going to hang around. Do you remember Carney, the unreliable boyfriend?
Yes.
Just sort of followed him around the UK for quite a while.
Yeah, I think that one's going to hang around. On Twitter, everyone says it was too late Powell. Now it's sock puppet Warsh.
Oi. Up next on the program, Krishna Guha of Evercore, live from New York City this morning. Good morning. So we got a bounce this morning, higher by 0.5% on the S&P 500, following a two-day losing streak on the S&P. Yesterday, the losses are raising the gains later in the session as we learned that J.D. Vance, the vice president, wasn't going to make that trip for talks to Islamabad. And then after the closing bell, the president extended the ceasefire indefinitely. So they're the gains so far this morning. In crude, and I think this is interesting, WTI and Brent holding on to gains. Brent crude still around triple digits, Brent at 99.55 and WTI around 91 this morning.
I think that speaks to what's actually going on in the Strait of Hormuz. You had the UK Navy overnight talk about how a vessel was taking fire by IRGC gunboats. You now have Tasnim reporting that 2 ships were taken basically hostage by the IRGC, and what they're saying is because for endangering maritime security. So right now, it isn't safe in the Strait of Hormuz, so which means there's no oil going to be passing through the Strait of Hormuz as normal levels, even though we have the ceasefire. It's not as though there's no peace, there's no war. We're just in this limbo. That's just contributing to just slightly higher yields as well, on top of the decent data we've seen in the last 24 hours. The 10-year around 432s, around 380. Under surveillance this morning, Kevin Warsh on Capitol Hill.
We are still dealing with the legacy of the policy errors in 2021 and 2022. That means a different new inflation framework. Independence has to be earned, and it's earned by delivering on the promises. The president never once asked me to commit to any particular interest rate decision, period.
Are you going to be the president's human sock puppet?
Senator, absolutely not. I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
So here's the latest this morning. Fed Chair nominee Kevin Warsh facing an extended battle for confirmation after President Trump doubled down on the DOJ's probe into the central bank. Bloomberg's Tyler Kendall joins us now from Washington for more. Hey, Tyler.
Hey, John, good morning. Well, it was clear from yesterday that Kevin Warsh will have the votes to advance. The question is just when, because even Senator Thom Tillis says that he likes the nominee, though he is standing firm that he can't get Warsh out to the full Senate floor until that Department of Justice's investigation into Fed Chair Jerome Powell is resolved. And as you know, Tillis really can make good on these threats because Republicans only hold a 13-11 majority on the Senate Banking Committee. Now, I had the chance to ask Tillis yesterday some questions about what a viable off-ramp may look like, including whether renewed congressional oversight could be part of the solution. And he told me he thinks that could work.
I think it's a great idea. And, you know, in truth, the one thing I realized in the banking committee is we never really scrutinize capital expenditures from these agencies that we regulate. We should be looking at the business. I think that's a great point that the president's kind of brought up, that we haven't really watched these things in detail in the past, and we can all benefit from that.
So if that was launched and the DOJ dropped its suit, then you would get.
Yeah, it's the right order, too, because there was no referral from this committee.
Now, to be sure, Tillis still needs that DOJ suit to be dropped, but this felt significant because back in February, Thom Tillis had brushed aside the idea that the Senate Banking Committee could launch its own investigation to supplant the DOJ's probe, and there feels like there's some momentum behind this idea, considering we heard from Senate Banking Chair Tim Scott earlier this week saying that he's looking at some sort of joint congressional action with his committee and House Financial Services. But, John, at this point, President Trump was asked about this off-ramp earlier this week, and he is holding firm and doubling down that the DOJ should continue in its suit.
Tyler, great work down in Washington, D.C. Offered an off-ramp. The president's not taking it.
The most important comment yesterday was after the hearing. Senate Majority Leader John Thune said the sooner the administration can wrap up this investigation and get ready to move forward with the new Fed chairman, the better off everyone can be. So that basically seems the Senate Republican position writ large, not just Senator Tillis.
Here's the view on Wall Street. Krishna Guha of Evercore writing, Warsh is laying the foundations for forward-looking rate cuts motivated by AI transformation. Krishna joins us now for more. Krishna, welcome to the program. A simple one to start. What did you learn yesterday?
Well, it was a tricky dance for Warsh because he had to satisfy 3 different audiences. The senators who he needs for confirmation, the president who's nominated him, and, of course, the market was watching very carefully. I think he did what he needed to do, and there's no question he's going to be chair as soon as these investigations are wrapped up. What did we learn? We learned the following. First, Warsh really does want regime change at the Fed, though he hasn't yet been able to really specify in detail what that means. Second, he's angling towards building the foundations for these AI transformation rate cuts. Third, he's still a balance sheet hawk, though he's going to be very careful about how he implements it. And fifth, that he wants to really rein back Fed communications. So this is going to be, over time, a very different Fed. How different, how quickly, is going to depend on whether he can bend his colleagues. And the answer may be not that different that quickly.
So, Krishna, let's pick out point number 3. And there's a range of good points there, but number 3 on the balance sheet. What underpins his opposition to the balance sheet? And what kind of meaningful change are you anticipating?
Well, you heard from Kevin yesterday really 2 different arguments. One is about the incidence of monetary policy, in effect, that rate cuts are more equitable than a larger balance sheet, which primarily affects longer-term interest rates and therefore has its first and largest effect on financial asset prices. And second, that a big Fed balance sheet is, in some sense, part of big government, that it encourages big government excesses. And I think there's both an inflation concept there and a political economy concept that Warsh believes in small government and small central banks.
Krishna, when he talked about regime change, he was talking about the Fed missing the mark when it comes to inflation. He says there needs to be a new inflation framework. What could that look like? And I was focused on that because the Treasury Secretary in the past has talked about maybe going after a range for inflation, not a direct point.
So as you rightly point out, there are a bunch of sort of technical debates around how you might set out your inflation framework, one of which is range versus point target. There are many, many others. I think the larger point here is that what Warsh is saying is, I'm really serious that I want far-reaching changes to the Fed's framework, the way the Fed uses its tools, and the way that the Fed communicates about policy and the outlook. The problem is that really there's very, very little detail. And it's much easier to identify, as Warsh correctly has done, some of the shortcomings of the Fed's current and past approaches than it is to actually identify rigorous and systematic ways to do it better. There are some big gaps there right now, and that creates considerable uncertainty as to how the Warsh Fed would seek to operate. And I do worry that, at least in the transition phase, that could be associated with more volatility, with more risk premium from the pure uncertainty side, at least until we get a better grip as to what Warsh really will try to do differently.
In some ways, Krishna, I think that Kevin Warsh has a point, and a lot of people on the street, maybe yourself included, agree with him, that we're still living in the post-GFC communication regime, and it's time to move away from it. What kind of changes do you think we could see in the not-too-distant future on communication alone?
Well, so on the communication front, what I'd say is this. I think there's a general recognition among current Fed officials and the central banking community more broadly that forward guidance is something that needs to be handled with a lot of care, that the forward guidance provided during the pandemic sort of boxed the Fed in a little bit, and some of the other central banks too, and that it's not the sort of instrument that should be used in normal times when you have the ability to move interest rates up or down as needed. But Warsh seems to be trying to suggest something more than that, a desire to really turn back the tide of ever-increasing central bank communication, talk less and about less, including the central bank's rate outlook. And I slightly worry here that that's something distinct from not doing forward guidance. You know, if the central bank communicates effectively, it really is a very powerful means of shaping the market rate paths, shaping and influencing financial conditions. We don't want to go back to guessing what they're up to.
Krishna, appreciate your time. As always, Krishna Guha there of Evercore. It's always difficult to unpack the neat message from a hearing like yesterday, because as Krishna said, there are so many different audiences for that message. Up next on the programme, we'll talk oil with Vikas Dwivedi of Macquarie. Live from New York City, welcome to the programme. Equity futures on the S&P 500 positive here by 0.5%. The first back-to-back losses on the S&P through April so far. It's been quite a run, hasn't it? On the Nasdaq this morning, we bounced by 0.75%. In the oil market at the moment, this is the state of things. Crude Near triple digits on Brent, 99. WTI around 90, elevated by just 5 to 0.6%. The tension continues to simmer.
So I think in the equity market, they're just looking for this off-ramp the president and the ceasefire he's extended without a deadline as optimistic. But in the oil market, they're looking at the facts on the ground. And just this morning, Iran's IRGC seized 2 ships, and they are bringing those ships to the Iranian coast. At the same time, overnight, the UK Navy came out and said IRGC gunboats hit a number of vessels. It is not safe right now in the Strait of Hormuz, and the Treasury Secretary says they are doubling down on this blockade, so don't test them.
They are the physical realities right here, right now. 3 hours away from the opening bout, the cash open just around the corner. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Even after cutting its full-year outlook, United shares are up nearly 1.8% in the pre-market. Maybe some of that having to do with that overall market optimism over the extension of the ceasefire. But also this, United did post better than expected results with demand holding up, especially in premium travel. And Morgan Stanley also saying that the key is that it updated its guidance and it did not pull it like some of its peers. Moving on to Adobe, this is a name that has been at the center of the AI disrupting software story, and it has been punished for it, down 30% year to date. But today it is catching a bid, up nearly 3.5% in the pre-market after Adobe announced a $25 billion buyback, a clear attempt to restore confidence and put a floor under those shares. And we end on Capital One. This is America's largest credit card lender. Shares are down nearly 2.6% in the pre-market after it missed on earnings as it puts aside more money for bad loans. That provision rising 72% to more than $4 billion, a sign that some cracks are starting to show up in the consumer. And CEO Rich Fairbank drawing a direct line to the Iran war, saying that higher energy costs are starting to weigh on spending. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. On our Raise Hour this morning, President Donald Trump extended the ceasefire with Iran indefinitely while vowing to maintain the blockade of the Strait of Hormuz. The president writing in a Truth Social post, the U.S. is pushing Tehran towards financial collapse. Elsewhere, Fed Chair nominee Kevin Warsh pushing the fundamental reforms of the central bank during his confirmation hearing. Warsh vowing to be strictly independent on interest rates.
The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
Republican Senator Tom Tillis promising to block Warsh's nomination until the DOJ enters criminal probe into current Fed Chair Jay Powell. And finally, a small group of unauthorized users gaining access to Anthropic's new Mythos AI model, which the company says can enable dangerous cyber attacks. Anthropic saying it currently has no evidence that the access is impacting any of its systems.
So it's a great Bloomberg scoop, and it comes at a time, Jonathan, as we do know the U.S. government is also talking to banks and other financial lenders when it comes to Mythos, and only a certain amount of people are actually allowed access to this right now. But you made a great point earlier in the program. Is it so scary, this product, that only a few people should get access to it, but now that we have a group that shouldn't have had access to it and nothing has really happened, is it actually that scary?
So I don't know. I don't know the answer to that. So, look, it's either one or the other. I'm not saying it is one or the other. I'm just saying it has to be one or the other. You can't sit here and say that it's so dangerous, only authorized users can use it, but also it's okay that unauthorized people have access to it. It's one or the other. And this is the difficult part of the whole story for me. What is real? What is the IPO pitch? That's what I've struggled with the whole way along. Undoubtedly, we're seeing real technological progress here. But at the same time, there is a marketing twist going into some major IPOs later this year, which makes it difficult to differentiate between one or the other.
Senator Kennedy of Louisiana agrees with you, and he said this yesterday at Kevin Warsh's hearing. He said, here's my worry. That's a lot of stuff about artificial intelligence making us more productive is a bunch of hype by people who want to sell stock in an IPO. I'd be careful there.
That's the latest on Anthropic this morning. This morning, Iran seizing 2 ships for, quote, violations. Tasnim, the country's semi-official news agency, saying the IRGC transferred the ships to Iran's coast. Joining us now for Insight, Colonel Wayne Sanders, Senior Defence Research Analyst at Bloomberg Intelligence. Wayne, welcome to the programme. Colonel, always good to see you. Let's talk about where we are right now. And I can tell you from the market's perspective where investors think we are. They think we're on a path towards de-escalation and not a path towards escalation. Are you seeing evidence on the ground that validates that?
Yeah, absolutely. I think if you look at it right now, both sides on the IRGC for the Navy fast boats as well as the U.S. Navy from the blockade perspective, they're operating in the only military box that they can inside of the ceasefire. But one of the biggest things that I use as an indicator is the ballistic missiles and the drone attacks are virtually stopped. They're pretty close to zero at this point in time. They were averaging between 70 up to 150 strikes a day, minus the first couple days. Obviously, and now you're looking at maybe one or two, even that. But they're being reported by UAE, Saudi, Bahrain, and others, where these strikes right now have not happened since the ceasefire, which I take as a very good sign that negotiations are still possible.
Well, are negotiations possible with the U.S. blockade still in place, given the fact that the Iranians have said verbally that that would need to stop in order for them to make that trip to Islamabad?
Yeah, absolutely. I think one of the biggest pieces that's going to come is the economic pressure, as you guys were talking about, from Cargill and in the oil stores, as well as others, are going to put additional pressures on there. It's very difficult also to find out who we're actually talking to in terms of Iranian leadership. There have been some reports internally where Iran is actually struggling from a command and control perspective, and maybe one of the reasons why you haven't seen that delegation move over to Pakistan. So from that, you don't know exactly who you're trying to talk to, who you're actually trying to strike that deal with. Is it somebody in Iranian's backed state media, or whether it's a foreign minister or beyond? So we're trying to make sure that we understand exactly who the Trump administration would actually be negotiating with during those peace deals as well in Pakistan.
That has been the difficulty all along. I've really enjoyed your commentary, Colonel. Thanks for joining us this morning. Colonel Wayne Sanders there of Bloomberg Intelligence. Who are they negotiating with and who's in charge? And are they the same person? That's been the difficult part of all of this all along.
Well, Iran definitely has consensus building in terms of their Supreme National Security Council, and obviously the Ayatollah reigns supreme. The IRGC is in charge, and the IRGC is the one that is definitely in charge of the Strait of Hormuz, and we're seeing that right now out in the open when it comes to these gunboats and these vessels. Who the United States is talking to are political actors, and they don't always see eye to eye.
Here's the take from Macquarie this morning. This from Vikas Dwivedi. He writes the following. There are steps towards market normalisation from day zero of traffic restarting through the Strait. However, we do not yet know when day zero is. Vikas joins us now for more. Vikas, good morning. Good to see you.
Good to be here.
Let's just start with physical realities. We can see these shortages starting to bite in Asia. Can see it starting to work through the airline industry. Lufthansa cancelling 20,000 flights. United Airlines cutting the outlook. What are the physical realities that you're tracking at the moment?
We're tracking exactly that. So we started with the petrochemical sector, right? So the loss of naphtha and some of the feedstocks for that sector started to hit immediately. Jet fuel followed shortly after. Jet fuel got a lot more attention because most people don't interact with naphtha daily, but so it's following a very concentrated hit in Asia, and now it's sort of transitioning to Europe, both on the petchem and jet fuel. It will move to diesel and gas oil in a little while, meaning in a few more weeks. We're going to start seeing announcements of problems with securing diesel supply, and that's the backbone of the world's economy for transport, for moving goods around. So, that is still coming.
There's been a lot of talk about a disconnect. People often throw that word around, a disconnect between the physical market and the paper market. And many people made the case that we'd see convergence, but we'd see the paper market move towards the physical market. The opposite kind of happened in the last week. What explains that?
Yeah, it's more of a set of shock absorbers, right, that are not working. So you think about something happens in oil, it's an impulse function, right? And you get a hit, and then all these things have to happen to absorb the shock. Futures would go up, the differentials between the futures and the paper, like in the physical, would move a little bit. But what's actually happened is the physical has just done its own thing, and the futures have not followed. And so the differential between them was never contemplated to be this wide. So in some sense, it's broken, right? And it may need to be reconfigured after this. One of the challenges is Brent is not deliverable. So if you hold Brent futures to expiry, unlike a lot of contracts, you don't get the barrels. So you have to mechanistically do it other ways, right, to force that convergence. But it's not happening. And it's been long enough now. I think this next Brent expiration, if we don't start seeing that convergence, then we may be in a position where no matter what type of news flow happens, Iran gets their hands on vessels or the U.S. blockade holds, traffic through Hormuz is still limited, physically on the ground, on the water, the situation keeps getting worse, and futures may not respond. We may still be talking about $98, $100 Brent, even though the situation on the ground is getting noticeably worse and hitting the real economy. When it hits diesel, when it started hitting naphtha, and you can't make pet chems, started hitting the real economy, but there's a lag there. When it hits diesel and gas oil, and then you can't move general goods around, that's when we will all kind of know it and feel it.
The U.S. really thinks that more economic pain potentially could be the reasoning for the Iranians to show up at the negotiating table. And yesterday, the Treasury Secretary said in a matter of days, Karg Island storage will be full and the fragile Iranian oil wells will be shut in. Do you think we're days away from that?
Yeah, it's getting close, but we disagree that it will significantly damage Iran's position.
Negotiating position.
Yeah, because even though oil is a big part of their economy, it ranges from 10 to 20% of their GDP. So it's a very large economy without oil. Now, it is the substantial source of funding for the IRGC. In that regard, it's absolutely correct. But will it buckle the economy and create a lot more pain for the general Iranian public? The answer, we think, is no. Or that would take a lot longer.
You also say there's a series of steps that need to happen once the strait actually does open, but you just can't decide when's going to be the first day that happens.
That's right.
But what are the first steps that would happen?
The very first step is, we'll assume Hormuz is open, right? And you can get financing, you can get insurance, and people can move through it. If you start with that, you got to move all the laden vessels, the full vessels that are just hanging out there, out. And then you've got to bring unladen or empty vessels back in. So third step is you need to start regrowing production. And they've managed it very smartly. The storage tanks in the Middle East are pretty far from being full. So there is logistical flexibility. You need some space in your tanks if you're going to restart production, right? That oil's got to go somewhere before it goes to tankers. So, those are some of the big steps.
It is going to take a long time to unpack so much of this, even after the crisis is well and truly over. Vikas, appreciate your time and your insight. Thank you, sir. Thank you very much. Vikas Dwivedi there of Macquarie. Let's get you an update on news worldwide. A busy morning already with the latest. Here's Yahara Arnott. Hey, Yahara.
Hi, John. The International Maritime Organization says it's working on a plan to evacuate crews from ships that have been stuck in the Persian Gulf since the Iran-U.S. war began. The organization says it can only implement the plan after clear signs of de-escalation. Russia is set to increase oil flows after restoring crude exports from its main western ports following weeks of disruption caused by Ukrainian drone strikes. Operations resuming at all three ports, with most berths back in service. And voters in Virginia approving a Democratic plan to redraw the state's congressional map in a way that could add up to 4 House seats for the party in November. Republicans will have a chance to level the playing field in Florida, with a GOP-led redistricting effort set for a vote as early as next week. That's your Bloomberg Brief. John.
Thank you for the update, Yahara. Thank you very much. Up next on the programme, consumer resilience.
People are overplaying the K-shaped economy. The top 20% of earners basically determine success or failure for this economy.
Consumers do have the bandwidth to work through the inflation.
Up next, we'll catch up with Holly O'Neill, the president of consumer banking at Bank of America. Each side positioning for leverage. It makes tracking these talks, or absence of talks, very, very difficult. The president vowed not to extend the ceasefire, then extended the ceasefire indefinitely. We're waiting for Iran to come to the table. Not coming to the table this morning. Equity futures on the S&P positive by 0.5%, on the Nasdaq up by 0.75%. The hope, encouraged by Iranian semi-official media, suggesting that there is a US signal suggesting the blockade might end soon.
Right. That was the signal that the Iranians thought they got via Pakistan. But what we're seeing right now is the U.S. blockade is not ending. The Treasury Secretary is doubling down on it. And actually, Iran just seized 2 vessels and bringing them to their shore. And the IRGC is out in the strait. And the UK Navy is talking about the fact that there was gunshots against some vessels they saw. So right now, things are not looking good in the strait. It's not war. It's not peace. but there's no oil moving.
Still on the path for de-escalation. That's a source of comfort. What are the other sources of comfort? The outlook for earnings, 1. 2, the data. The data, pretty good. Retail sales better than expected. Under surveillance this morning, consumer resilience.
People are overplaying the K-shaped economy because you're not seeing it in demand.
The top 20% of earners basically determine success or failure for this economy.
Overall, the consumer has remained intact.
Consumers do have the bandwidth to work through the inflation, but it doesn't mean that they're not kind of economizing.
So here's the latest this morning. US retail sales surging by the most in a year, showing consumers are still spending even in the face of higher gas prices. Joining us now to discuss is Holly O'Neill, the President of Consumer, Retail and Preferred Banking at Bank of America. Holly, welcome to the program. You can correct me if I'm wrong, but I think these are the numbers. 1 million new credit card accounts, 100,000 net new consumer checking accounts. That is real growth. Holly, where's that growth coming from? And what are the trends that you and the team are leaning into?
Yeah, great. Good morning. And so that growth is coming across the board in the consumer segment. And as you mentioned, the consumer remains very resilient. So we are still seeing solid asset quality in our business. We're seeing good organic growth. We're seeing excellent liquidity for our clients. That's their core operating accounts are still over and above what they were pre-pandemic, and they're still spending. So spending growth was up 4.3% year over year, which is the highest rate of growth we've seen since 2023. And as you mentioned, gas prices are part of that growth, but even when you peel the gas prices away, the growth is still there. So 3.6% when you take that gas price increase out.
Holly, a lot of the numbers we talk about are aggregate figures. Can you break it down across consumer groups? How broad-based is that so-called resilience?
So the core resilience, we are seeing it across all cohorts. However, we are still seeing really very strong spending growth in the higher income. That leads the economy. But we are still seeing strong spend growth in middle and lower income. So it is across the board. But the trend is that the higher income is really doing most of the work there.
Holly, how much are the larger than expected tax refunds a lot of Americans are getting cushioning their household spending right now?
Sure. So those tax refunds are higher than they were last year, and we are seeing that offset the fuel price shock. So when you look on average, those refunds can withstand and absorb that shock for about 5 months. So we expect that to continue to bolster and support the fuel price increase we're seeing for consumers.
For 4 or 5 months, though, then in 4 or 5 months, what happens then? Do you think the households will be under even more pressure?
We could see more pressure. So we could see some discretionary spending come down. In March, we saw that services, not gas, actually drove March spending. That's another really positive sign for the consumer. So they're not letting the increase in gas prices impact their spend on things like travel and leisure.
Holly, you've got great data on money coming in and out of accounts. The conversation we have with economists at the moment about the potential for inflation, the pushback we get is often the labour market isn't tight enough, wages aren't hot enough. How are you tracking wages and incomes at the moment? What's that picture evolving? What's it looking like?
Well, as you know, unemployment still remains in a normalized environment. So that is a very positive sign for the economy. We're also seeing wage growth across all higher, middle, and lower income cohorts. The higher income cohorts are seeing stronger wage growth. So that is a factor here. But we still see wage growth across all sectors.
What about the credit story? Holly, what's happening with credit? Are you seeing more and more people just make minimum payments on credit cards? Any pockets of stress that we should be tracking?
I would call it overall a very normalized credit environment. So it's operating as we would expect within different quality segments of the economy. So normalized environment. We are still seeing good payoff rates on card. And so we're still seeing borrowing and spending. Our loan balance is over overall, we're up 4% across all consumer segments year over year. So that's a sign that clients have access to credit, they're using it, but we're still seeing them use it in a very responsible way. So we're still seeing good payoff rates on a month-over-month basis.
Holly, you sound very optimistic. Consumer resilient, you're looking at these numbers, strong digital usage. Was there anything in this survey, in your research, that gives you a pause for concern?
I think, one thing I would point out is that we saw younger workers, so those just out of college, ages 22 to 27, they have a level of job uncertainty, slightly higher unemployment. So they could be impacted more severely by rising fuel prices, impacting their spending. But that's really one of the only signs that we're seeing here. So overall, I am very optimistic about the consumer, and the core tenets of that are good, solid, stable unemployment. We're seeing wage growth. We're seeing spending. We're seeing normalized credit quality. So all of those signs, I think, are pointing to a resilient consumer.
Holly, final question. It's a fun one. Key partner of the World Cup, the upcoming World Cup this summer. Looking forward to what that partnership looks like with you, FIFA, and the whole of the team as they bring that circus to the United States. Holly, some of the media coverage of the World Cup at the moment isn't exactly favourable. What kind of encouraging signs are you seeing about host cities and the kind of incomes we could see pick up there, the kind of business activity, economic activity we could see across this nation and elsewhere?
So, as you know, everyone is really excited about FIFA and the World Cup coming to the U.S. That will give these local communities a boost, support in spending and really some good activity in those communities. I saw it firsthand at a friendly match between France and Brazil. The crowds were incredible. It was great to see people pouring into the stadium. So I think you're going to see a lot of activity in these local markets as a result.
Very cool. I hope we see more of the same. Holly, thank you. Appreciate your time. Holly O'Neill there of Bank of America. A real-time look at this economy. The money going in and out of accounts, the absence of stress, the degree of resilience we still see in the broader economy, and the hope, because I do hope, that the World Cup later this summer is a massive success, because the coverage of things right now, and I understand where the coverage is coming from, there's real reasons for it, the coverage of it hasn't been favourable.
Well, how could it be favourable when New Jersey Transit's talking $100, $150 train tickets to get to New Jersey? That's on top of already being able to afford to go to the match. These numbers to buy these tickets to go see some of these soccer matches are just astronomical.
I hope the World Cup bears are wrong later this summer. That's my hope.
You're a World Cup bear.
Unfortunately, I have been, yeah.
And unfortunately for your team's not in it. So there's a lot of reasons for you to be a World Cup bear.
Not just that. I just think it's been so far, and I hope I'm proven wrong, so far a bit of a missed opportunity to improve access to the game, to get the high school kids, the middle school kids, the kids at elementary school, to get them access to these kind of games for some really cheap tickets. I haven't heard enough about that. All I've heard about is $5,000 tickets, $2,000 tickets, and $100 travel to get to the stadium.
It might be an own goal by the United States, and I'm there with you, because I played soccer growing up, and the idea to have a World Cup in America,
super
so
cool,
exciting.
Right?
So exciting.
I know. Equity futures right now in the S&P positive by 0.5%. Up next, we'll catch up with Lindsay Rosner of Goldman Sachs, the former Defense Secretary Mark Esper, Brandon Oglenski of Barclays, and the former St. Louis Fed President Jim Bullard. The second hour of Bloomberg Surveillance just around the corner.
Consumers do have the bandwidth to work through the inflation.
There's a lot of skepticism that inflation is really coming down.
You're really balancing between inflation risk potential and where does the Fed go.
It's not an aggressive cutting cycle.
I still think we'll get one or two by the end of the year.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures bouncing back by 0.5% on the S&P, following the first back-to-back losses of this month so far. On the Nasdaq 100, higher by 0.75%. In the oil market, the tension simmering, just hovering around $100 a barrel on Brent, 99 up by 0.6% on Brent, WTI up by 0.5% as the president extends the ceasefire indefinitely.
Indefinitely, no deadline, which is really not par for the course for this president. Usually we have a deadline that he's working to. He wants to exert as much leverage as he can out of these individuals and try to press them to the table. right now, we're basically in limbo when it comes to this conflict, which is why you probably see the oil market a bit more elevated, especially when you're getting headlines out of Iran that the IRGC is actually capturing vessels, and the Treasury Secretary is doubling down and saying this blockade is not ending anytime soon.
So what's anchoring this market right now? Outlook for earnings still okay. Data's been pretty decent. And on this specifically, we've talked about this a few times already this morning. There is a path towards escalation. There is a path towards de-escalation. And at least for now, the president appears committed to the latter and not the former. That's the good news. Here's the reality at the moment. This is the ripple effect. The consequences continuing to build. Airlines. United Airlines cutting its outlook. Lufthansa scrapping 20,000 flights as we work our way through the summer. Later on this morning, Bramo, Lisa's catching up with Scott Kirby of United Airlines at 9:15 Eastern Time. A lot of questions for his industry.
A lot of questions for his industry, and as we've spoken about, what we're going to see is a lot of companies, especially airlines, have to make tweaks on the margins. Interesting, though, even though United slashed its full-year profit forecast, they did say demand remains strong. What did we just hear from Bank of America? The consumer right now is resilient, and that is why it is such a difficult moment. But I found one thing very interesting from Holly. The tax refunds that a lot of people are using now to basically cushion themselves from higher energy prices, she said that has a 4 to 5 month bandwidth. It's basically a Band-Aid. So they need to really decide what they're going to do with this conflict. Can this be wrapped up before it really starts to put more financial strain on American households?
Resilience, at least for now. Equity futures positive by 0.6% on the S&P. Coming up this hour, we'll catch up with Lindsay Rosner of Goldman Sachs with equities chasing the headlines. The former U.S. Defense Secretary Mark Esper joins us as President Trump extends the Iran ceasefire, and the former St. Louis Fed President Jim Bullard on Kevin Warsh's path to confirmation. We begin this hour with stocks grinding higher following the renewed truce in the Middle East. Lindsay Rosner of Goldman Sachs writing, the tennis match of headlines is not tradable. This isn't the pre-COVID playbook. Stay invested. Lindsay joins us now for more. Lindsay, good morning. Good to see you.
Thank you.
I'm interested in that last line. It's not the pre-COVID playbook. What does that mean? Just unpack that for us.
Sure. So before COVID, we had tons of time that you would have these kind of big market events, and then you would see the movement, and you would have days, maybe even a week, to digest what was going on, pick your spots, and actually be able to put on a position. Things are moving so quick. The cycles right now are super compressed. So that idea that you can be cute and add on weakness and buy those dips, it doesn't happen any longer.
So as you look out, what kind of time horizon are you thinking about? And can you ignore this mess as it evolves from day to day? Yesterday's a great example of that, by the way. Yesterday before the close, we're talking about Vance not going to the talks. Then after the close, 10 minutes later, we're talking about an extension of the ceasefire, an indefinite extension of the ceasefire, just whipsawed from one direction to the other.
I think that's case in point. And so if you look back pre-Iran to where levels are right now, you've almost had complete retracement. So if you look at just that context of 2 months, you should have just stayed invested. The idea that you could have taken off any sort of investments because of this geopolitical conflict, be able to add at the wides, ride that back. I mean, nobody can be that kind of hero in this market. So it's important to have a strategic framework of at valuation levels, what do you think the right amount of risk is?
So let's work through that. Let's start with what we typically go to first in fixed income treasuries. So we're back to the upper end of the pre-war range, 430 on 10s. I keep hearing that people say we've created value in the yield curve. There's value out there. You should be buying that. Do you agree?
So it's all predicated back to what you were saying before, how quickly we get out of this energy shock. Rates, kind of different than spreads, actually have to care tremendously about inflation. Specifically in the U.S., obviously, there's the dual mandate we heard all about yesterday with Warsh. Elsewhere across the globe, it's more about price stability. So inflation is even more important, and different countries have different kinds of exposure. So in the U.S., we have the ability to create our own energy. That's really important. It was propped as a national security thing or motivation, and it's correct. But so have we created value in the U.S.? On the margin, it feels like we're now going to trade in a higher range because there is permanent scarring from what's happened with oil, right? We don't just get to go back to normal. We have tankers that are stuck. Oil doesn't just come online as easily as it sounds like. We can just say, the conflict's over, let's go back. It doesn't work like that.
Are you surprised at where we're trading right now, given the physicality of the realities on the ground? I mean, you open your note with continued emotional blockade required, and that's how I've been feeling the last 6 weeks.
Yeah, I think you cannot have emotion around these kind of headlines. You have to pull the camera back and see what's actually the underpinnings of various economies. And specifically in the U.S., we're in the middle of earnings. We've had 15% of market cap report. We've had sales up 10%, earnings up 30%. Those are really stellar numbers. That is the actual economy. Oil, important, is an input for some, a use for others. That is real, but that's not the totality. And so I think if you just get overwhelmed by the headlines and emotional about it, you're going to miss some opportunities to actually get returns in this market.
Are there opportunities outside the United States right now?
There are. We actually think it's in emerging markets. Where we don't think the opportunity is in Europe. Europe's sensitivity to energy and the fact that it isn't homegrown in the way that we're saying that the U.S. and other places actually in emerging markets are as well. We like to lean into EM and out of Europe. And we think that the pricing that's happened, the movements, that Europe hasn't bounced back, makes sense.
This is the geographic disparity. Can you take us inside credit and talk about potential dispersion from sector to sector? How are airlines trading right now relative to, say, the obvious energy names?
Yeah, so the energy story is challenged. Name specific has to do a lot with the debt that they carry. I mean, there's been a lot of headlines this past week about can there be potential avoidance of bankruptcy. You really have to do your homework and look to every single name. So I don't want to say broad strokes what's happening with airlines. Broad strokes, I will say, tech, the mega cap, the hyperscalers, positive. Energy, if you have oil as something that you own and have access to, it's been a good time for you. So it really is very sector specific. And the other thing I'd highlight too that's come through so far in earnings is banks. Banks have done tremendously well, and that's been an overweight in our portfolios for a long time.
Let's pick out that one sector, tech, because tech is underpinning the snapback we've seen in the equity market as well. There was a moment where there was just this pocket of tension that the question was being asked. Were we starting to see pushback, which would force these hyperscalers to cut back on CapEx and we'd see less issuance in the future? Where are you on that now?
Yeah, so I think we started 2026 with this idea of this is like the show me year for AI. And so as we waited to be shown what AI could do, I think there was some questions. Do these multiples make sense? Oh my God, these CapEx numbers every single year, surprise to the upside. Can that be justified? And I think we've seen probably all of us in our day-to-day lives, certainly from a portfolio management perspective in my seat, the use case for AI. Like, it is absolutely part of what we do every single day. So the show me, we've been shown. And I think that it makes sense. And that bounce back that you have is warranted. I think also what we had in the beginning of the year, really in February, was this baby with the bathwater. Tech, software, SaaS apocalypse, or whatever that phrase was. There was just anything that touched it you didn't want to own. And now people are actually thinking about the fundamentals, and that's important. Back to the emotional blockade. Like, out of the emotions, let's get into the numbers. That's really what's most important.
Software last week, software names. Best week, software on the S&P 500, best week in 25 years. Major squeeze in that sector.
Well, to your point, people are just actually taking a step back. You had all the ups and downs of the Iran war after the SaaScopolis, and they're looking at what some of these real earnings are going to be and also the impact on the real economy.
Lindsay, I've struggled with one thing, though. I'm still struggling with it today. What is marketing and what is real? And I know you can't do single names, but I'll do a single name. When Anthropic comes out and says something is really dangerous, we can only give certain people approved access, makes you think there's something crazy is happening, and I imagine that the valuation of that company might get bid up into that IPO. How much of it is just marketing, and how much of it is about sucking in capital ahead of some major IPOs in the next 12 months?
So these are, there are many players in this space. And so marketing's function, I think, is to say we are the best player out there. So you can't deny that it makes sense that they would speak about kind of their importance. Whether or not it's important, it certainly feels like cybersecurity is a huge risk out there. And so if they have something that can identify the blind spots, that's important and definitely warrants more focus and more attention.
Lindsay, always appreciate your time. One of the best. Thanks for making time for us. Lindsay Rosner there of Goldman Sachs on credit, on fixed income more broadly, and AI at the end there.
Well, when we're talking about Anthropic, also Axios has this report out today about OpenAI, and they're briefing federal agencies, also the Five Eyes, when it comes to their new cyber product over the past week. Obviously, Anthropic and OpenAI are neck and neck for all of these tools, but also who is going to get to the IPO first and who's going to have a better public offering.
It's a massive race for the year ahead, that's for sure. Equity futures right now holding steady. Gains of 0.5% on the screen on the S&P 500 with an update on stories elsewhere with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump extending the ceasefire with Tehran while keeping the blockade on the Strait of Hormuz. The president announcing the decision in a Truth Social post after planned peace talks fell apart. Hours earlier, he had said he was not inclined to extend the truce. Fed Chair nominee Kevin Warsh fielding a variety of tough questions yesterday during his confirmation hearing on Capitol Hill.
Did Donald Trump lose the 2020 election?
We try to keep politics, if I'm confirmed, out of the Federal
I'm just
Reserve.
asking a factual question. I need to know, I need to measure your independence and your courage.
Senator, I believe that this body certified that election many years ago.
During the hearing, Warsh vowed to be strictly independent on rates if confirmed and push for fundamental policy reforms at the Fed. And a small group of unauthorized users gaining access to Anthropic's new Mythos AI model, which the company itself warns could enable dangerous cyber attacks. According to documentation viewed by Bloomberg, users in a private online forum obtained access on the same day Anthropic announced a limited test release of the model. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the program, buying time with Iran.
Will you extend the ceasefire?
Maybe I won't extend it.
Okay.
But the blockade is going to remain. But maybe I won't extend it. So you have a blockade, and unfortunately, we'll have to start dropping bombs again.
Up next, we'll catch up with the former U.S. Defense Secretary, Mark Esper, live from New York City this morning. Good morning. Equity futures on the S&P holding on to gains. We're up by 0.5%, up by 0.7 on the Nasdaq. The Russell up by 0.8. There are no talks, but we have extended the ceasefire. And there was one report from Iranian media. It's up to you how much weight you want to put on this. I can only state what's coming out of different publications. From Tasnim news agency, the Assam official news agency, making the case that there has been a signal from the United States about ending the blockade.
Potentially, maybe in a few days we could see that. But right now, at this moment, and also that was an Iranian source, I'd love to hear that from the White House. At this moment, the blockade is there. Treasury Secretary is talking about it, even himself, because it would be Treasury that were going after these sanctioned vessels. And the IRGC is actually capturing vessels that are trying to pass. Someone said to me, no war, no peace, but no oil.
Which is why Brent crude is still around 100, trading at 99 so far this morning. WTI back into the 90s as well. Crude on Brent and WTI up by around 1% on the session so far. Under surveillance this morning, buying time with Iran.
You don't do a ceasefire when you're literally obliterating the other side. I think we have a very successful negotiation going on right now. And I think it'll be, if it happens, it'll be announced fairly soon. And that'll give us free oil, free Hormuz Strait. Everything will be nice.
Will you extend the ceasefire?
Maybe I won't extend it.
Okay.
But the blockade is going to remain. But maybe I won't extend it. So you have a blockade, and unfortunately, we'll have to start dropping bombs again.
So here's the latest this morning. President Trump extending the ceasefire with Iran indefinitely, with peace talks on hold. Bloomberg's Tyler Kendall joins us for more. Hey, Tyler.
Hey, John, good morning. Well, despite President Trump previously signaling that he didn't want to extend the ceasefire, he says that this will give Iran more time to submit a new proposal for the U.S. to review. President Trump saying that part of the reason why the negotiations have collapsed is because of what he is calling, quote, seriously fractured leadership in Iran. As our own reporting indicates that top officials for the IRGC are pushing a much tougher negotiating stance compared to, say, less ideological figures who appear more inclined to make a deal with Washington. The thing is, what has been consistent among Iranian officials is that they want to see the U.S. lift its naval blockade before there is a resumption in talks amid new escalation just this morning. As Annmarie just mentioned, Iranian state TV reporting that the IRGC has seized 2 ships it accuses of, quote, secretly exiting or trying to exit the Strait of Hormuz. As a UK naval liaison reports that Iranian gunboats have been firing at vessels that are in the strait. And we can also point to some new data that Iran is now moving super tankers into the Arabian Sea in a bid to try to push back on the U.S.'s block of its shipping. The thing is, John, President Trump has repeatedly said that the blockade is not going anywhere. And we saw this potential for more escalation in this post from Treasury Secretary Scott Bessent overnight, saying that the U.S. will continue its maximum pressure campaign.
Tyler Kendall with the latest. Tyler, thank you. To extend the conversation, I'm pleased to say we're joined now by the former Defence Secretary, Mark Esper. Mr. Secretary, welcome back to the programme. Appreciate getting some time with you, sir. Many people like yourself have made the case that these strikes made sense because Iran was unwilling to give up its enrichment programme. A lot of people understand that perspective. Mr. Secretary, do you think they're any more serious this morning about giving up that programme?
No, it does not appear to be the case right now. I mean, clearly we're at an impasse, and the key issues at this point seem to be the control of the Strait of Hormuz, which Iran is asserting sovereignty over, and then secondly, of course, the nuclear program. And when I say that, it's everything from the 1,000 pounds or so of enriched uranium that's there in the country. It's the infrastructure that supports it, to include the cascades. It includes, my view, we need to get inspectors back in. So to me, those are the two core issues. And Iran has always said and continues to state that they have a sovereign right and a right under international law to enrich uranium. So to me, those are the main points right now that both sides are fixed on. That was the point, of course, at least the nuclear, that disrupted talks nearly 8 weeks ago in Geneva.
This has been a long-standing problem. Mr. Secretary, clearly certain elements of the military campaign have been successful. One objective was to degrade the military capability of Iran. Without a doubt, we've seen that happen to a certain extent. What can happen now? What can the US do to exert additional pressure, and through what means, to get Iran to come to the table and achieve the other objectives?
Yeah, it's a good question. First of all, while the decapitation of the regime was successful, what it did was change leadership. And rather than put in a more pragmatic group of people, it put in a more hardline group of people. And of course, the IRGC has asserted more control. So now we have a regime that seems seemingly more willing to dig in, although the claims that there are fractures within the government right now tend to be true. But I suspect they'll kind of wrap that up pretty quick. My sense, again, is that at this point, each side is going to stick to its positions with regard to the blockade to control the strait. And we'll see who breaks first under economic pressure. We know, of course, the impact it's having on the West, with countries who are net importers of oil, particularly in Asia, are suffering, are tightening their belts. We know that jet fuel is going to start becoming pretty scarce here in a matter of weeks. And there are other effects such as fertilizer and helium and whatnot. But on the other hand, Iran gets $450 or so million a day from its oil exports. So how long can it hold on? So I think each side is staring the other down to see who blinks first. And Trump has said, look, he'll wait for a counterproposal, although there's some early reporting this morning that he said we'll give him 3 to 5 days, which would take this until next Monday or so.
So you don't think the regime is as fractured right now as some of the reporting suggests? In the next few days, can we see them speak with maybe more of a unified voice and show up to these talks?
I suspect so. They need to. I mean, the talk now is that the speaker Galibaf is more the pragmatist here. But keep in mind, he was an IRGC commander, so his roots go back. And Mojtaba Khamenei, who we haven't seen, also has a close relationship with the IRGC. So I think there was some problem with messaging. I suspect they'll get on the same sheet of music. If not, it'll be interesting to see how that plays out. With regard to the Iranian government. But again, the IRGC has the guns, and usually the guys with the guns play the tune.
Exactly. Jonathan was mentioning how the financial markets, at least for some of them, holding on to that report that maybe the United States was willing to give up the blockade. How long do you think the U.S. could sustain this blockade?
I think we can sustain it indefinitely. The United States military definitely has the capability, the Navy, to do so, particularly with regard to how they're postured in the Gulf of Oman and beyond that, and the ability to reach internationally to do that. Look, it's hard to see President Trump backing down on the blockade unless Iran does the same. And what I mean by that is Iran has to back off this claim that somehow the new routes will go right along their coastline in between their islands, that there has to be permission from the IRGC first before you approach those lanes. And then, of course, we know they've been trying to charge or have charged $2 million or so per ship to transit. That cannot happen. We have to return in one way, shape, or form to the status quo ante to get back to something that's reasonable with regard to a future agreement going forward.
There are reports in the Financial Times as well as Bloomberg about some Iranian vessels being able to get through the blockade, turning off their tracking devices. How hard is it for the U.S. Navy to track some of these ships if they do that, turn off and go dark?
Look, we can see these ships with overhead surveillance from drones, from satellites. We obviously have radar. We can track these ships. That's not an issue that they turn off the transponders. It's just a matter of making sure that we can pick them up and then do what we need to do. Of course, we saw the other day the dramatic footage of the U.S. Navy taking shots, disabling a ship, and eventually boarding it. So I have complete confidence in the United States Navy to do that. And now, of course, we see the Iranians are reciprocating by seizing 2 ships and took shots at a third one in the last 24 hours or so. So this has had possibility to really heat up with regard to the innocent players in the Gulf, the hundreds and hundreds of ships that are stuck up in the Persian Gulf trying to make that run or believing that they got the okay to do so and eventually get captured by the Iranians.
If the U.S. Navy has the ability to go after these vessels that shut off their transponders, why are they letting some of them through? Is that an economic decision for some partners in Asia?
I'm not sure I believe the Iranians that ships are getting through. I think we need that. Those are good questions to ask of the administration. Maybe some are being let go, but I doubt it. I think that may be more propaganda from the Iranians.
Mr. Secretary, in some ways, you're on the outside looking in now. And I can tell you it's difficult sitting in this seat to understand what's real, what isn't, what is just part of the negotiations ahead of potential talks, about talks. From your vantage point, with the experience you have, what is guiding you and the way you're thinking about the trajectory of things?
Well, look, clearly, again, we have a more hardline regime in here, and a lot of what they're doing is messaging to the domestic audiences, messaging to others within the government, trying to get the word out. In my experience of sitting in the Situation Room dealing with the Iranians is they do make public statements, and then they have private statements or domestic messaging that is far more hardline. So you have to sift through those two things. But on the other hand, the administration's messaging has been all over the map as well. One day it's threatening, the next day it's conciliatory. The next day, we talk about deploying more forces, and then we're talking about backing off. So both sides there are mixed messages coming from both sides. But I think it's clear, though, that both sides don't want to go back into a hot conflict in terms of exchanging missile shots, drone shots, air attacks. But neither do both sides want to blink first. So we're really at this impasse, and we'll have to see what happens. I'm sure behind the scenes, countries, certainly the Pakistanis, Europeans, maybe even the Chinese, are trying to get both sides into some place where we can get an agreement to lift this blockade of the Strait of Hormuz, because the folks paying right now are everybody else as well, right? Certainly the Asian economies and to a lesser extent the European economies, but gas prices, oil prices, the price of diesel fuel, which transports so much of our goods, has gone up all around the world.
Mr. Secretary, appreciate your time. Thank you, sir. The former Defence Secretary there, Mark Esper, weighing in on the war in the Middle East. That's a source of comfort for many people in financial markets, that both sides don't want to return a resumption of hostilities. The impasse, though, comes with its own problems.
It does. We're in limbo, and the problem is we don't know for how long we're going to be in this sense of uncertainty.
Some of those problems in the airline industry. We'll catch up with Brandon Oglenski of Barclays as United cuts its full-year forecast. That conversation just around the corner, live from New York City. You're watching Bloomberg TV. Back-to-back losses on the S&P 500, and here is your bounce. Up by 0.5% on the S&P, and the Nasdaq up by 0.7%. The Russell up by 0.8%. Yesterday, energy stocks, the only sector in positive territory on the S&P 500. I imagine that story is going to change based on these moves so far. In the commodity market, Brent and WTI shaping up as follows. Brent crude very, very close to triple digits, 99.39 and higher by 0.9%. It's fair to say that, yes, there are no talks. There are no hostilities, broad-based hostilities, in quite the same way there were in March. The market's clinging to that. And the prospect of a deal. And a president committed, it seems so far, to de-escalation. That's the good news. The bad news, the impasse has its own problems. The physical realities are still brutal. And they're the kind of numbers you see on the screen, a reflection of that brutal physical reality.
Even with the impasse, it means that no oil is getting through the Strait of Hormuz, or very little amounts of oil. And actually what we've seen in the past few hours is things have gotten worse. in terms of the IRGC taking 2 vessels hostage. Now, potentially, is that just where we are today and things can get better in the next few days? We don't know. But the status quo right now is basically living in purgatory when it comes to Strait of Hormuz in this conflict.
Crude high this morning by close to 1%. 2 hours away from the cash open, the opening bout just around the corner. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We've gotten some earnings in the last hour, and a standout is GE Vernova. Shares now up 6.8% in the pre-market after posting a beat in a raise, and it was already a high bar. This stock is up some 200% in the past year due to AI-driven power needs, and it was still able to clear those high expectations, blowing past estimates and keeping that rally going. Another stock another corporate that just had earnings is AT&T, and it has just flipped to negative, down about 0.7%, even after it beat estimates, with subscriber growth really driving the story. It beat on both wireless and internet subscribers, and doing that even as competition heats up, with the likes of Verizon and T-Mobile also offering similar bundled offerings. And even after cutting its full-year outlook, we are seeing shares of United Airlines up 1.7% in the pre-market. Some of that likely having to do with the overall optimism we're seeing in the market due to President Trump extending that ceasefire. John?
Yahira, thank you. Thanks for the update. More from Yahira later this hour. On our radar this morning, President Donald Trump extending the ceasefire with Iran while maintaining the blockade in the Strait of Hormuz. The president announcing the decision on Truth Social after planned peace talks fell apart. Elsewhere, Iran's UN envoy claiming they've, quote, received some sign the US will end its blockade in the Strait. The ambassador adding, once that happens, Tehran will be ready to resume negotiations. And finally, the Trump administration weighing an extension of the Jones Act waiver, which is set to expire next month. The exemption already helping to move 9 million barrels of crude, and it's considered vital to keeping energy prices stable.
So I could see the administration doing this because it's been a huge help for places like California. You would think California, given it is energy rich, for political decisions, it's actually heavily reliant on products coming from Asia. So having the waiver has actually helped places like California, also Alaska. Remember Ryan Peterson of Flexport was talking about how Alaska's become this huge hub when it comes to freight. So as long as this crisis goes on, I imagine some of these tools and measures the administration introduced, they'll just extend.
I imagine there's some people making a case to permanently extend some of these waivers.
I think there are a lot of people in the White House that think, quite frankly, the Jones Act is a little bit silly and maybe we should just make this a forever thing. I think that would take congressional approval, though.
We've talked lots about the fallout and the ripple effects. You can see it in the airline business. Lufthansa cancelling 20,000 flights. United Airlines cutting its full-year forecast on rising jet fuel costs. Brandon Oglenski of Barclays maintaining its 150 price target, writing, quote, United delivered a relatively solid first-quarter result despite higher jet fuel prices, which we believe points to double-digit unit revenue gains. Brandon joins us here in the studio for more. Brandon, good morning.
Yeah, good morning, John. Thank you for having us.
Thanks for being here. I think it's important to start the conversation on demand and the demand we had before the war and how things have developed through the war. Just walk us through that, because demand before this war, some of the numbers we were seeing from the airlines, really, really strong.
Yeah, that's right, John. And actually, we closed out the fourth quarter pretty decent, and then we got a lot of guidance early in the year in January when results came out. And airline management teams were talking towards like mid-single-digit unit revenue gains, which we can effectively translate to pricing. We're now talking about like 10% pricing gains here in the second quarter. So it's gotten even better. And I know there's a chorus of, institutional investors that are very concerned about what higher energy costs mean for the U.S. consumer, especially looking forward. But so far, the consumer's been voting very loudly that discretionary spending on travel is actually moving into a higher priority.
Just sit on that, because this is really hard for people to sort of get their heads around, particularly people from the outside looking into the United States. Demand was great before the war, and you're saying demand is picking up through the war.
I would argue it's even gotten stronger, and this is across the board, too, because if we talk airlines the last few years, the lower main cabin, the economy ticket, that's where there was a lot of pressure on the industry. You're hearing most management teams say, look, we're seeing strength not only in premium or long-haul international, but even in domestic economy now. So I think we're definitely seeing strength of a U.S. consumer accelerate here, and quite the opposite of, I think, more bearish expectations.
So can that demand basically counteract the rise in jet fuel costs?
It's a great question. Right now, no, because jet fuel is more than doubled from where we were to start the year. and revenues up, let's call it 15% on minimal capacity growth for the industry. So we are seeing very good pricing outcomes, but not enough to really offset the negative impact on margins. However, if we look at the forward curve for WTI and the implied, refining margins for jet fuel, we should be getting back to close to prior earnings power by probably the end of the year or early 2027.
We've seen companies in Europe, like Lufthansa, have to cut some flights. Could we see that in the United States?
Absolutely. I mean, we heard Delta 2 or 3 weeks ago say, look, capacity is going to be roughly flat in the second quarter. United just last night said they're going to cut 5 points out of future growth. And that's going to put them at expansion of maybe 0 to 2% in the back half of the year. So we're seeing, especially the big airlines, because Delta and United, Southwest American, each of them controls, roughly 20% of the domestic business here.
Domestic versus international. Let's break it up. The world has a price issue. Certain regions have a supply problem. Domestically in America, we don't have a shortage issue. We might have a price problem. In Europe, we may well have a shortage issue. And this is where the transatlantic routes get interesting to me, at least. If Lufthansa is cancelling 20,000 flights, surely some of the forces they're exposed to, down to United and American, are also exposed to them. You can't refuel in one place and then refuel in the same place again. You have to refuel where you land. And if you can't get the fuel in Europe, don't you have to start cancelling some flights?
I think this could become a concern if this, blockade of the Strait and the lack of ability to move oil across the world persists into the summer months. And I think, some of the things that we're seeing from European carriers is also economic decisions too, just like we're seeing United and Delta say we're cutting back on capacity. So, I think could be easy at this point to say, hey, look, we're envisioning that jet fuel is going to be short. But for sure, we've heard these warnings. I think that becomes, again, more of an issue as we progress through the summer.
You alluded to it slightly. I want to unpack it just a little bit. Do you think that this war, to some extent, it's been used as cover to cut some unprofitable capacity in certain places?
For sure. And let's bring it back to the U.S. real quick. Like the 6 a.m. flight out of Cleveland maybe is not going to be profitable when WTI is above $100, whereas maybe at $40, you can make that incremental revenue work.
Do you think that even if it were to have the sign-off of some of these companies or interests, we could see a United America?
Well,
that's what I'm calling United and American Airlines if they tied up.
United America, I like it. You can propose it to Scott. I think he's going to be on the show later today.
He is a little bit later this morning.
I don't want to overlook the boss yesterday because he was on another news program, but effectively said we don't want to see a big merger like United and American. He referenced the aerospace sector that we let, that sector get too consolidated. But they did mention, look, Spirit, they're in their second bankruptcy. They need capital because they're burning through more cash than they suspected they would. JetBlue, their CEO is out there saying we're not considering bankruptcy this year. So I think when you're seeing these comments from these very levered airlines, that we're likely to see more consolidation on the low-cost side where there is a lot of balance sheet problems right now.
So more consolidation, but exactly who? Who's primed to make those deals?
Well, I would propose the question to Mr. Kirby when he comes on here. He said in the past that he was very frustrated that United exited JFK, last decade, and that was maybe one of the biggest strategic
Then you have to
wonders.
go to Newark now.
Right.
Which people like me are not going to do.
Well, and you should tell him, that maybe JetBlue could use some help here. I'm not sure.
Well, that would be the one I would go to. JetBlue would have those gates. They would have that access. They have that footprint over at JFK. I was never fully convinced when I saw those stories that Kirby actually wanted American Airlines. I felt like this was just a page out of the president's book, that you anchor it to the extreme, and then the door opens to do something else. For instance, JetBlue.
And guess who he pitched it to? According to Reuters, he made the pitch directly to the president. So the president probably recognized, oh, I like what you're doing there, Scott, but that's a little bit too far-fetched, even for me. But maybe there's more consolidation down the line.
Brandon, do you see a strong case for consolidation? Is there a strong economic case for consolidation at the top?
Look at JetBlue's statement that their CEO put out yesterday, Joanna. She said, effectively, there are benefits of scale in this business that even at our size, because JetBlue is not a small airline, but especially loyalty, the co-brand credit card deals, which are very lucrative, and they get more lucrative the bigger you are. So I think it is important to have scale in this industry, even from a consumer perspective.
Have you got a favourite? It's a difficult time, but do you have a favourite at the moment?
Again, it's difficult with the volatility in oil markets, but yes, I think long-term, United and Mr. Kirby has a culture moving in Chicago. Everyone's on the same page there. We like it when we have ambitious companies, and I think, United's really on the right track.
I ask that question at the end of every conversation with airlines. Do you know the answer I never get? American.
I knew you were going to say that.
What can they do to change? What are they getting wrong?
Look, that could be a longer conversation.
American, about a minute, if that's okay.
Yeah, American has lagged relative outcomes at Delta and now United for quite some time. There's been some miscues within their own internal organization. There's been a little bit of turnover in the executive ranks. And, we like Robert Isom, but he's more operationally focused. I think when you look at American, is how do you leverage these mega trends within airlines, which is people want more premium products, they want more international access. If we go back to the pandemic, American significantly trimmed their wide-body long-haul fleet, which kind of took them out of contention for that market relative to what Delta and United have done since. So I just think structurally there's potential there, but you need to see maybe a little bit more ambition from the leadership team.
There have been some mistakes along the way, that's for sure. Brandon, appreciate your time. Thank you, sir. Brandon Oglenski there of Barclays. We mentioned it. It's happening later, 9:15 Eastern Time. Lisa catching up with Scott Kirby, the United Airlines CEO. Plenty to discuss. The takeaway for me from that conversation, there's a lot to unpack there, but ultimately, demand was good going into March. Demand is even better March and through April.
And I think you made a great point. For some companies, are they just using the war as a convenient excuse to get rid of maybe some routes that actually weren't making a lot of money and didn't really make sense for them?
United this morning higher by close to 2%. Let's get you an update on stories worldwide with your Bloomberg brief. Yahira's back with us for more. Hey, Yahira.
Hi, John. We are seeing Boeing shares up 3.25%. The plane maker posting lower than expected cash outflow as it delivered the most aircraft in the first quarter since 2019. Boeing is ramping up output of the 737 family, a major step toward turning around its finances and paying down debt. SpaceX agreeing to either acquire AI coding startup Cursor or pay for its work. SpaceX is planning an IPO this year after its merger with xAI, which CEO Elon Musk has said is behind on coding tools compared to its peers. And the White House has reportedly come up with a list of tiers of NATO allies. According to Politico, it includes a summary of member countries' contributions to the alliance as President Trump warns of consequences for not backing the U.S. in the war with Iran. That's your Bloomberg brief. John?
Yahira, thank you. More from Yahira in about 30 minutes' time in the next hour. Up next on the programme, regime change at the Fed.
The Fed missed its mark. And we are still dealing with the legacy of the policy errors in 2021 and 2022. That means a regime change in the conduct of policy.
Up next, we'll catch up with the former St. Louis Fed President Jim Bullard, live from New York City. This is Bloomberg Surveillance. Can just sense the fatigue has really set in. 2 days of marginal losses on the S&P 500. The first 2 day back-to-back losing streak on the S&P so far this month. Here's the bounce up by 0.6%. The Nasdaq 100 up by 0.7%. We've said this repeatedly. The market has moved on. And the market has moved on because they perceive from the latest communication that we have a president that is committed to de-escalation. And that in the last 24 hours, extending the ceasefire indefinitely validates that perspective.
There'll be a lot of stop and goes, especially as we live in this limbo, given the conflict and the regime we're dealing with, and the fact that IRGC seems to be very much so in control, definitely when it comes to Strait of Hormuz. But I go back to what Alex Altman said of Barclays. He was like, I understand your frustration, Airman, looking at the physical market, but especially for equities, they just need to know, are we going, is it an uptrend or a downtrend? And based off the President of the United States, it's an uptrend because the President wants to put this conflict behind him.
I think what often happens, and I see this a lot in our business, is that journalists and the media operations more broadly, around the world, I'm not picking on anyone in particular.
Picking on me, John?
No, I think they're very focused on good versus bad. And markets operate in better versus worse.
Yes.
So without a doubt, the situation in the Middle East is bad. No one would describe it as good. From the market's perspective, do you see a path, the ingredients for things to get better or worse? And the market has decided in the last several weeks that the path from here is one where it gets less bad, if not better.
Right.
And for the market, at least, that's what you can anchor yourself to and start to price in a better future.
It might not be good, but it's better than we were, say, 53 days ago when the conflict, 54 days ago when the conflict started. Also, this market has lived through how many conflicts and issues, even the past of the course of the last few years. Think of Russia, Ukraine. In the beginning, very concerning, especially given the energy space, and the market then was able to move forward.
Things can change, but that's the state of things right now. Things can change fast, that's for sure. 99 on Brent, 90 on WTI. In the bond market right now, yields coming in just a touch. We're down across the curve, down by 2 basis points on twos, 3.75. Under surveillance this morning, regime change at the Fed.
The Fed missed its mark, and we are still dealing with the legacy of the policy errors in 2021 and 2022. That means a regime change in the conduct of policy. I think that means a different new inflation framework. The president never once asked me to commit to any particular interest rate decision, period. I'll be an independent actor if confirmed as chairman of the Federal Reserve.
It's the latest this morning. Fed Chair nominee Kevin Warsh calling for fundamental policy changes at the central bank as uncertainty looms over his path to confirmation. The former St. Louis Fed president, Jim Bullard, joins us now for more. Jim, good to see you, buddy. As always, welcome to the programme. Based on that hearing, and I know it's difficult to make hard-based and big conclusions right now, but based on that hearing, what are your takeaways and what changes are you anticipating at the Federal Reserve?
Yeah, I don't think the hearing itself was not very surprising. It's a lot of political theater that we're used to. I thought Kevin Warsh was well prepared. He had some zippy answers to difficult questions, and which is what you need in this situation. So I think in a different era, this would go by voice vote, through the Senate. But we're not in that era, and so it's going to be tied up a little bit longer.
I won't draw you into the politics. Of course, we know why this might be an extended battle to get him confirmed. But ultimately, for many people, it's a matter of when and not if. Jim, when he does get in, can we talk about communication? Because you yourself, when you were on the committee, you had your own issues with the dot plot of the Federal Reserve, the forward guidance. We've been living in the post-GFC communication regime for a long, long time now. What changes do you think need to happen?
I think you could definitely improve the dot plot. The committee has had a hard time coming to grips with that. I'm not sure what Kevin wants to do with that. But I think it could be done better. The main thing you should really do here is just move to a monetary policy report that would be quarterly. That's what other central banks do. That's an international standard. You don't have to divine everything from a few dots. You can have a more fulsome report on all the things that are going on in the economy, including the war, or if there's weather or whatever else is going on in the economy. You can talk about that in a monetary policy report. So a good thing for him to do would be to come in and say, hey, we're just going to replace the dot plot with a monetary policy report the way other central banks do it.
Jim, how do you think the committee will feel about that? Will they get on board?
I would hope so. I think time has come for this. The dot plots are was put in relatively quickly, I think. I think Ben Bernanke thought that he could make modifications to it, but then it kind of devolved into a stalemate, and that's where we are today. And that's why you've got this kind of mystical dot plot that we use.
He talked about regime change, but can you translate in details what else we could see out of a Kevin Warsh Federal Reserve?
I think on the communication, he equivocated a little bit on press conferences. So we'll see. I've been an advocate of press conferences. I think that also, I think, is an international standard. Everybody does it, every meeting. So I think it would be hard to pull back from that. That would be a reduction in transparency. Markets aren't going to be too happy about that. Other types of communication, I mean, maybe you could change it a little bit, but I think the cat's out of the bag. The era of transparency has been very important to markets. I don't think you can go back to the Greenspan era, which sometimes I get the impression that, there's a little bit of, wishing for that era. And I lived through that too, and I loved it too. But I think it'd be very tough these days.
Sometimes it's difficult to put the toothpaste back into the tube, Jim. You know that. Jim, I want to talk about balance sheet policy. It's clear that the incoming Fed chair, if he's confirmed, once he's confirmed, has an opposition to the way the balance sheet's been used, particularly after GFC. It's obvious to us why it was used in the way it was. Once you got to the zero lower bound, you started to lean on balance sheet a little bit more. His commitment to doing something about that, Jim, how are you envisioning that's going to look in the next several months and potentially several years?
Yeah, I think it would take years. I think he could put the ball in motion. I think the Fed could operate with a smaller balance sheet. You don't have to have it the way it is today. But he would have to get consensus on the committee. You'd have to work carefully with markets. I think it could be done in a way that didn't disrupt activity and allow the Fed to carry on in other aspects as they have.
Jim, one element of his argument, one dimension of it, is that using the balance sheet and the way it's used has pulled the administration, pulled the Federal Reserve into politics. I'd make a counterpoint that the short-term interest rate is only one tool and it's limited in its effectiveness. And that's why you yourself started to lean on the balance sheet to attack longer-term interest rates. Jim, if they put more emphasis on short-term rates, what does it tell you about their ability to really influence the US economy more broadly?
Yeah, the story of the balance sheet is really the story of the effective lower bound or the zero lower bound. So it's only in those situations that you might want to come back to balance sheet policy. And we saw it pretty recently, right? The pandemic, we slammed the interest rate down to zero and went right into QE type policy. And I think that would happen again if you got some big shock in the years ahead. And so I think that the committee should just be forthright about that and say that that's what they plan to do. But I think to be fair, I think Kevin Warsh has been a vocal and adroit critic of, once that is over, then you don't need the gigantic balance sheet anymore, and you should have a policy of getting it back to a normal size so that you have more scope in the future.
Jim,
and
can
I
I
think
jump in the 30 seconds we have left?
That is a reasonable thing to say.
Forgive me, you're suggesting it's still going to be a crisis-era tool. Is he?
I don't know what he says about this, so I won't put words in his mouth. But I would say if you got a pandemic-sized shock or a financial crisis-sized shock, I would bet that that's the direction the committee is going to go, and markets would expect it. Global financial markets would expect it. So if they're not going to do that, then I think you should say, hey, we're swearing off this tool. We don't need it anymore. Here's what we're going to do in a crisis.
Interesting. Jim, thank you, sir. Appreciate it. Excuse me for jumping in. We're up against the commercial break. Thank you, sir. The former St. Louis Fed President, Jim Bullard. Up next, we'll catch up with Brian Nick of NewEdge Wealth, James Picariello of BNP Paribas, Stephanie Roth of Wolfe Research, Chris Watling of Longview Economics.
The market is getting more discerning.
You're starting to see a bit of a broadening.
There's some durability behind this.
The technicals in the equity market are extraordinary.
The direction from here is really what's the next positive surprise?
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And your scores, the price action looks like this. Equity futures on the S&P 500 bouncing back from back-to-back losses, higher by 0.6% on the S&P 500. On the Nasdaq, up by 0.8% as the president does something he said he wouldn't do. He's extended the ceasefire, and this time without a deadline. In the commodity market, Brent and WTI still elevated. Brent around triple digits at 99. WTI at $90 a barrel, higher by 0.6%.
So the president has given the Iranians more time to submit their proposals. He said this is based off the conversations, especially through the intermediaries in Islamabad. J.D. Vance is not on his way there. There are no talks right now. So we're in this place of status quo. There's no intense hostilities, although we did see the IRGC take hostage 2 vessels. But at the same time, there's no peace and there's no oil in actuality really moving the Strait of Hormuz. For the oil market, that's why they're holding on to these gains.
The leadership is fractured. We know that. That's been true for quite a while. He's waiting for a so-called united proposal to come from the Iranian side before deciding the next move. And we haven't had an official response, even now, from the Iranian side.
No, but I would say, don't look what the Iranians say, look what they do. And what are they doing right now? Overnight, there was, you had gunshots according to the UK Navy, on a number of vessels. They just took vessels hostage. The IRGC is in full control of the Strait of Hormuz. And right now, what you're hearing from the Iranians is they're not going to let up on that. That is their one piece of leverage, especially as the United States has this blockade.
More data, more earnings coming up in a week ahead. Later on, we'll hear from Tesla. You'll hear from IBM. Then on to tomorrow, you'll hear from American Airlines. Don't miss this later this morning. United Airlines, the CEO, Scott Kirby, sitting down with Bramo. Lisa and Scott catching up at 9:15 Eastern Time at a time when they've cut their outlook and Lufthansa has slashed 20,000 flights.
So Lufthansa has a bigger issue than the American Airlines, of course, because jet fuel is a serious concern for Europe. The IEA was talking about maybe there's only 5 weeks left of these airlines being able to get a hold of jet fuel. And we just heard from Barclays that the cost of that jet fuel right now has basically doubled since before the war. I want to put the American Airlines earnings together and Lisa's interview together to understand if we're going to have maybe down the horizon a United America.
A United America.
Do you like that?
That's your branding for the company?
That's my branding for the company, so if they want it, they can come talk to me.
Based on recent communication, I think, from American Airlines, I think it's highly unlikely it's going to happen, and communication from the president himself. But I think the door is open for some kind of combination with United plus one. Who that plus one is right now, Spirit, JetBlue, not sure.
Well, to our Barclays analyst, Brandon, I think makes a lot of sense if United potentially was going to maybe go after JetBlue, because United doesn't have that presence in JFK. So if you want to fly United and you're in New York, you have to schlep to Newark. Are you doing that? I'm not sure. I don't think so.
I get the feeling that you don't want to do that.
I don't want to do that.
Okay. We'll see if that question's asked. I imagine it will be. Later on this morning, 9:15, Lisa and Scott Kirby catching up at 9:15 Eastern Time. Equity futures near session highs, higher by 0.6% on the S&P 500. Coming up this hour, we'll catch up with Brian Nick of NewEdge Wealth with stocks bouncing back. James Picariello of BNP Paribas with a bearish outlook on Tesla ahead of earnings. Plus, we'll catch up with Stephanie Roth of Wolfe Research on the path ahead for interest rates following Kevin Warsh's Senate hearing. We begin this hour with stocks recovering as President Trump extends the ceasefire with Iran. Brian Nick of NewEdge Wealth writing the following. We're impressed but no longer shocked by risk assets resilience in the face of unprecedented geopolitical uncertainty. Brian joins us now for more. Brian, good morning.
Good morning.
Markets moved on. Is it time to move on?
Our clients certainly think so. We talk to our advisors every day. Our clients were asking throughout March and the beginning of April about buying the dips. People have gotten used to not just a V-shaped recovery in markets, but these sort of checkmark shake recoveries where we didn't really seen this before. V-shape on the way down and even faster recovery on the way up. There is an acute fear of missing out. And I think it's tied back to what's going on with policy. This is an administration that uses the stock market as a barometer for success in a way that no previous administration has done, very publicly, very openly. And we think with some reason. Stocks are a leading indicator for the economy. They don't want to see this market go down. They understand what's supporting the economy at this point, which is consumers who have become very wealthy with the stock market doing what it's done over the last 3 years, and a desire to not see that evaporate.
That line, stocks are a leading indicator of this economy. You think it's the most powerful leading indicator for this economy?
It's literally been in the Conference Board's index longer than any other indicator. The S&P 500 has been in there since the 40s. And this is, time and time again, all these other indicators, the ISM, consumer confidence, is telling you that the world's coming to an end, but the stock market has been the most accurate indicator of where the economy is going in the next 6 to 9 months.
Financial conditions have eased. The data's okay. The outlooks for earnings is good. You put that all together, it's hard to fight this market. What you just said about attitudes towards this market. Vikas Subramanian at Bank of America said something similar. The question we used to get, should I wait for a pullback to buy the S&P? The comment we get now, I don't want to sell the S&P because I might have to buy later at a much higher price. How deeply embedded is that investor attitude in America?
The other thing about selling is people don't want to realize the capital gains. This is one of the things we talk about almost more than any other issue, is like, think about all these embedded gains, people who have been riding up, even in an index fund, that don't want to sell and be caught wrong for 2 reasons. 1, because they realize the capital gains, and 2, because they sold at the wrong time. That's a very compelling reason not to get out of stocks. And for people who are looking for opportunities to get in, any kind of 3 or 5% pullback is, taking care of that fear of missing out that have been crippling people and making them stay on the sidelines for probably too long at this point.
But if the capital gains is one of the reasons why people don't want to sell, is that really a good barometer of where the economy is?
Well, we talk about this all the time. The alternative to paying capital gains is to wait for the market to go down, right? And then that's obviously not what people are looking to do. They don't want to pay fewer capital gains because the market has fallen. But the underlying demand and the faith in the AI story, in the broader U.S. economic ability to kind of weather this energy shock, we haven't really seen, not even panic, we haven't really even seen kind of concern.
What do you think it would take for this market to go down then? Because I feel like everything since January has been thrown at it. Or even since Trump's first term, if you consider Liberation Day.
The last 2 years, we've had these policy shocks that have given people adequate permission to run for the hills after a very good period of market returns. The thing that we were worried about in the beginning of the year was the labor market potentially acting as sort of an exogenous variable, taking down stocks. If you start to see unemployment moving up 4.5, maybe getting closer to 5, we thought that would be enough to spook the equity market. We warned people about correlation between stocks and bonds going positive again. Probably not something you should wish for, because it means that rates are going down and stocks are going down. But that lately the data there has been better. We've seen this weekly ADP hiring number improve every week for the last month, and it's starting to look quite healthy. If that's true, then it's hard to see, again, outside of something going even wronger with the Iran war and seeing equity prices go up even further, or oil prices going up even further, it's hard to see where that moment of panic is going to come from that causes people to genuinely this time flee.
It's a really difficult exercise to go through when you're drowning in headlines, to get yourself out 12 months, look out 12 months, looking out another 12 months, and the kind of things you'll be thinking about. When you're looking out 12 months, just have a sneak peek looking behind you. When you look back 12 months, looking out 12 months, can I ask you this? I'm getting there. Getting to the question. Is this going to be an important moment for you? This war in Iran, this energy shock, will it be an important moment?
We think so in this respect. The momentum that markets had going into the war was this broadening trade. You were seeing things that hadn't performed well. It was actually going back to around Halloween last year. You were seeing value stocks perform better. You were seeing international stocks really dominate U.S., even through February. We think things may have shifted. The sort of the tectonic plates on our feet may have shifted, and we may be back in this lower growth, narrower set of winners environment.
So this is not just a tactical trade, this leadership that we're seeing at the moment. You think it's more than that? Yeah, well, so tactical trade is typically when you see small cap and value outperformance. That's where, as my colleague Cameron Dawson likes to say, we're here for a good time, not for a long time. Yeah. That's what we saw in the fourth quarter of last year and the beginning of this year. We're not sure that's the enduring story here, and it may have been the Iran war that caused people to kind of take that story off its axis. It looks like now where the earnings revisions are coming from is more narrow, where the market leadership has gotten narrower, and the hopes that we were going to get above trend GDP with softening inflation and lower interest rates and stronger cyclical force in the U.S. economy, that may be on hold. So we've set the stage for a return of, let's call it U.S. exceptionalism with tech leadership?
That's how we're positioning now. And I know that the markets have already kind of run a little bit in that direction, but they haven't completely made up. If you look at equal weight S&P versus market weight, equal weight is still up over the last 5 or 6 months. We'd be betting more on the kind of this narrowness continuing.
Brian, appreciate your time.
Of course.
Well articulated. Thank you. Brian Nick there of NewEdge Wealth on the leadership coming from tech. I'll tell you what, right now on my screen, that's helping this equity market to go out to new session highs. Let's give an update on stories elsewhere this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Iran seizing 2 ships in the Persian Gulf for what they're calling violations. Tasnim, the country's semi-official news agency, saying the IRGC transferred the ships to Iran's coast for inspection. It comes after Iranian gunboats fired on a cargo and container ship in the Strait of Hormuz earlier today. United Airlines slashing its full-year profit forecast due to higher fuel prices caused by the war in the Middle East. The guidance coming as the airline reported better than expected first quarter results. Lisa will be sitting down with United CEO Scott Kirby at 9:15 a.m. Eastern. And Adobe announcing a $25 billion share buyback over the next 4 years. The company's CFO saying it's a direct expression of confidence in cash flows and long-term value for investors. The stock is up today, but it is down nearly 30% this year as investors worry about AI's potential to disrupt software. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next on the programme, the Morning Calls Plus. We'll catch up with James Picariello of BNP Paribas, looking ahead to earnings from Tesla, and we'll touch base with Bloomberg's Ed Ludlow in just a moment. From New York City this morning, good morning.
Physical has just done its own thing, and the futures have not followed. And so the differential between them was never contemplated to be this wide. So in some sense, it's broken, right? And it may need to be reconfigured after this. This next Brent expiration, if we don't start seeing that convergence, then we may be in a position where no matter what type of news flow happens, futures may not respond.
That was Vikas Dwivedi of Macquarie weighing in on the commodity market. Your scores look like this morning. Equity futures on the S&P up by 0.8, up by close to 1% on the Nasdaq. A tech story in the mix that we'll get to at Ludlow in just a moment. In the commodity market, Brent and WTI still elevated. The tension still simmering. Brent crude at 99. WTI just breaking through 90, just briefly, back to 89.97.
So we have the ceasefire. We don't have a deadline. We don't have really a time frame when the president is going to be willing to accept this Iranian proposal he is waiting for. And at the moment, nothing has really changed on the ground, as we continuously have been saying for days, except actually it's gotten a little worse in terms of the IRGC taking hostage 2 vessels.
That's the price action. Let's get you some morning calls. First up from JP Morgan, raising its price target on Halliburton, highlighting demand growth. That stock up at a pre-market by 1.1%. The second call from Stifel, lowering its target on Birkenstock, reflecting a difficult consumer backdrop due to the war with Iran. That stock just about unchanged. And your third and final call from Barclays, raising its target on TSMC, expecting AI demand momentum to continue. Let's stick with tech. Sources telling us here at Bloomberg, a small group of unauthorized users have gained access to Anthropic's new Mythos AI model, which the company wants could enable dangerous cyber attacks. Ed Ludlow has the latest. Ed, that one's a shocker, or at least could be. What are the details?
Yeah, it's a shocker in part because of how this group or community got access to the preview. In the first instance, this was a contractor with a relationship with Anthropic, right? And they used those official contractor credentials to gain that access. And Anthropic has confirmed that and said that the scope of the access was contained within that. They also basically scrubbed various code bases like GitHub, where you basically sleuthing, find out where you think the code base might be for Mythos and access it. What's confusing for the Bloomberg audience is that this is being billed by the company, John, as being highly capable in cybersecurity, being able to go through very large code bases, find vulnerabilities, and then potentially act on them. But it is a general purpose model. You cannot isolate a capability. And in the reporting from Bloomberg's Rachel Metz, there's no evidence that they did anything wrong with the model. They experimented with it, but they didn't use it for some kind of cyber security attack. It's just that it dates back to April 7th, when Anthropic started the exercise of making it a very, very limited release to big technology companies and banks, and trying to keep a very closed circuit on who could experiment with what is a highly capable model.
So, Ed, let's talk about something I've struggled with personally for the last several months.
Sure.
What is real? What is hype? What is just marketing for the IPO? Now, let's take Mythos an example. So Mythos, I'm told, I have to be really concerned about because it's potentially quite dangerous and could expose vulnerabilities. I'm taking that very seriously. And they're saying that we can only let certain people use it with authorization to work out what those vulnerabilities might be ahead of time. Got that. At the same time, I should be totally OK with the idea that unauthorized users have got hold of this. I'm struggling to square the two. It's either one or the other. Which one is it?
Anthropic and its leadership have come in for criticism over a longer period of time relating to several releases of the models and how they communicate about the risks of it. You know, they warn often about the capabilities of various models. When I was on stage a week ago with Mike Krieger, who co-leads Anthropic's labs, they are basically the product cycle team. The way that he built this was that this is not some sort of great revenue exercise. They're leaving a lot of money on the table because they are closing limited release. There's lots of evidence that all kinds of industries want access to this. So we know what its risks are. Basically, potentially a bad actor, a malicious actor, if they got access, which is hypothetical, could do something bad with it. But on the other side of the coin, and this is why the Treasury and the Fed's involved, they want them to have access, those key financial institutions, core parts of the financial system, so that they can use its benefits, its proactive side. To answer your question succinctly, you know, is it a marketing exercise? You know, the pushback the company would say is that they're not economically gaining from this right now, at the same time as they are trying to negotiate their future with this government in the White House.
Ed, I'll leave it there, because I think they are gaining. Because they're gaining because their valuation in private markets is exploding ahead of the IPO. But we can talk about this another time. The thing that's boosting equity markets right now, Ed, is NVIDIA and Google. Can I get your thoughts on this tie-up, this agreement? What kind of deal is this? Because as soon as that broke, I saw equity markets gap out to new session highs.
Yeah, so this is really interesting because to all intents and purposes, the other piece of news that came out is Google has 2 new TPUs, a training-specific one and an inference-specific one. That puts NVIDIA and Google in competition on the hardware side, on the silicon side. On the software side, it is highly normal for Alphabet or Google, through its various AI labs, and there are several, to cooperate with other technology companies. NVIDIA has its own library of open source models, specifically focused on physical AI, but increasingly Jensen has tried to talk up NVIDIA's software competence in agentic AI and its partnership with OpenClaw as an example. So this isn't a surprise if you accept that they are frenemies, right? They are both in competition with each other on the silicon side and on the software side. I would say if you're looking at the move in Alphabet, there has been a huge dump of news, which includes a number of cloud contracts, these 2 new chips, and the NVIDIA relationship. It's not exactly clear to me at this moment, John, which of those is driving the market in the pre-market.
I'd appreciate it.
Yeah.
It's great to have you in New York, and I'm looking forward to the programme in a few hours' time. Bloomberg Technology with Ed Ludlow. To Ed's point, it's not just the NVIDIA tie-up, that combination, that deal, whatever you want to call it. It's also Salesforce and Google Cloud expanding a partnership on AI agents. Just a bunch of news dropping in the last 10, 15 minutes or so, driving that stock out to new session highs.
Exactly. This is underpinning basically the U.S. financial market. Everyone is back to the AI trade, the AI themes, because that is going to be something that is long-term and pretty much ignoring what is going on in terms of the conflict in Iran.
Later on today, we'll get some numbers from Tesla. Let's talk about that. James Picariello of BNP Paribas staying bearish on the EV maker with an underperform rating, noting a, quote, challenging setup for Tesla. James, good morning.
Good morning.
What's challenging for this name this morning?
Yeah, I mean, as I think about the first quarter, we're about 10% below consensus on gross profit and adjusted EBITDA. We know first quarter deliveries and energy deployments, right? Tesla already provided that. And as we think about the auto business, the growth volumes were up 6%. The growth was entirely driven by rest of world. So the core markets for Tesla, North America, Europe, China, that was essentially flat. There was some mid-single-digit growth in North America, offset by declines in China, and Europe trended overall flat. So no major surprise there, positive or negative. And there's a heavy lift for the remainder of the year as we think about auto volumes relative to consensus, and even my own forecasts. I'm quite constructive the rest of the year on autos getting the volumes getting better. On the energy storage side, the deployments were down quite significantly. Down 15% year over year, 40% quarter over quarter. I think that's going to be a focal point of one of the many focal points of tonight's conference call, just what drove that.
The pushback that I'd get from the bulls right now, I imagine would sound something like this. Talking about Tesla and cars is the same as talking about Amazon and books back in the 90s. That it's not about where we are now, it's about where we'll be and what this company will be in the future. Does that not resonate with you?
Oh, it certainly does. I mean, when I think about my price target of $280, 70% of that valuation is attributed to robotaxis and Optimus, right? Optimus hasn't started commercialized production, right, of the humanoid bots. That happens, well, the promise is that it happens by the end of this year. And for robotaxis, the active fleet for Tesla hasn't really expanded. It's not accelerating from the end of from fourth quarter to now. So there's a high bar set for the progress rate, and we've yet to see it.
In the short term, though, do you think Tesla's going to have to cut prices because deliveries are low, at least in North America?
Yeah, I think so, right? The $7,500 tax credit went away September 30th. Demand is not necessarily rich for EVs in North America.
Couldn't this be a good moment for them, though, with gasoline prices inching higher?
Yeah, but when we think about the profitability, right? Tesla is guiding this year's CapEx at $20 billion. Right? Last year they did $8 or $9 billion. Right? So the full expectation is for cash burn.
What car should I be excited about? Rivian, mid-size SUV?
I knew you were going to say that.
I like the Scout as well. Isn't that the VW partnership that's coming to the US?
Coming, that's
12,
coming
18
late.
months?
It's a Scout.
The Scout's not coming until 2028, 2029.
Oh, really? That far out?
But I mean, we have an outperform rating on Rivian. I am quite bullish on the R2, which starts to really ship the second half.
What kind of numbers are you thinking about with regards to Rivian and the R2?
So for the R2 specifically, for next year, I'm thinking about 85,000 units.
Okay. And where are we now at Rivian?
For the total volume's around 40,000, but with no R2 as of last year.
So introducing the mid-size SUV, we could see a doubling in sales basically for that company?
Yes.
Wow. Okay, James, appreciate your time. Thank you, sir. James Picariello there of BNP Paribas. You seen that? The mid-size SUV from
I'm looking at it now. It does look quite cool.
Looks pretty cool.
But you have to wait till 2028.
Sure. Is it 2028 or next year?
No.
No, Rivian.
Production has started now. The Scout.
The Scout.
Oh, the Scout.
Scout's a different car.
Oh, no, sorry. I'm looking at Scout. I thought that's what you asked me about, because I've never seen these before.
The Scout is very cool. Back in sort of leaning into Americana heritage.
This is very cool, but 2028, I mean, you can't wait around to buy a car for that long, can you?
No. I'm just saying there are some things coming on the horizon. Yeah. Anyway, let's talk about what's happening on the screen right now. A headline crossing just moments ago on Germany and the outlook for GDP. German GDP and the outlook from Germany, they've cut their 26th growth forecast to 0.5% from 1%. So they've cut their forecast in half on the war with Iran. This is the difference between the US and Europe right now, far more exposed for Europe at the moment, which is contributing to a much lower forecast for economic growth for the year ahead. If you're just joining us, that forecast is now 0.5%. It was 1%. It was already low, and now it's lower.
So this is what the economy minister had to say, according to an email statement ahead of the press conference they're going to be giving, going through some of these numbers and what they're seeing. The economic recovery expected this year is once again being held back by external geopolitical shocks. The war in Iran is driving up energy and commodity prices. This is putting a strain on households and increasing costs. We're seeing what Europe dealt with when it came to Russia, Ukraine. They're dealing with once again when it comes to Iran because they import so much of their energy. We saw also today Rachel Reeves in the United Kingdom after the inflation data came out and that popped. She said it is because of external factors like what's going on in the war in Iran.
Every time I hear from officials in Europe, it sounds so bleak. The ECB President Christine Lagarde with similar words as well. Stateside equity futures on the S&P higher by 0.75%. Coming up next, we'll catch up with Stephanie Roth of Wolfe Research on the path ahead for interest rates following Kevin Warsh's Senate hearing. Plus, Yahara's back with us. She's got your morning movers. Boeing shares rising after aircraft deliveries surged in the first quarter. That stock is up in the pre-market by 4%. Equities elevated here by 0.7% on the S&P 500, on the Nasdaq up by 0.9, on the Russell up by 1 percentage point. This market taking some comfort from an extended ceasefire with no deadline. That extension coming from the president after the close just yesterday. That's the bounce. In the commodity market, Brent and WTI shaping up as follows. Still elevated and tension still simmering. Brent crude close to 199.60, and another headline about another ship in the Strait of Hormuz just crossing, this one from the Journal.
The Journal saying Iran's IRGC fired on a third ship in the Strait of Hormuz. We do know that the IRGC basically took two vessels hostage, bringing them to Iranian shore. We have this ceasefire, Jonathan, as you say, no deadline. At the same time, I don't see any indication that there's going to be a consensus from the political figures and the IRGC within Iran to come up with a proposal and a plan to give to the Pakistanis to show the President of the United States. So we might be in limbo for a lot longer than maybe this White House was hoping for.
We are deadlocked, and that impasse comes with its own problems, and you see those problems in this commodity market. As we count you down to the cash open, the open about 60 minutes away. Let's get you some morning movers. Yahara has more. Hey, Yahara.
Hi, John. It's been a busy morning for earnings, and Boeing is the latest company to report, and the results were positive. Shares are up 3.8%, with cash burn coming in much better than expected, and airline deliveries for the quarter hitting their highest level since 2019. That combination fueling a surge in revenue, helping investors to understand the turnaround story as it tries to recover. Moving on to the airlines, we are seeing United shares still up 1.4% in the pre-market, even after it cut its full year outlook. But it is this overall optimism in the market over that ceasefire extension that is helping to lift the entire sector. Shares of Delta up 1%. Shares of American, which reports tomorrow morning, up 1.5%. And we end on GE Vernova, moving to the upside, up now 7.7% after a beat and a raise, with the company clearing a very high bar. Shares are up 200% in the past year due to booming demand for energy due to AI. John.
Yahara, thank you. That's the tech story right down the screen, which is why you're seeing the equity market gap out again and very, very close to all-time highs on the S&P 500. That's the US story. The international story, far more tense. Lufthansa cutting 20,000 flights. Germany slashing its growth forecast to just 0.5% from 1%. That's 26 to 27. They're now looking for just 0.9% GDP growth, down from 1.3. This war will have consequences, and those consequences are being found in Asia and in Europe.
Yep, and the United Kingdom, inflation higher. So you're starting to see potentially the consequences and the scarring happening in Asia, which already are telling people to stay home, and there's some sort of requirements on how late they can stay out at night. Certain days you can go actually use cars and others you can't. And then in Europe, cutting flights, telling people use bicycles instead. And then we're seeing it in growth projections saying this is going to hit us in terms of growth. This is not a good place for Europe to be, especially since they just went through the shocks of Russia's invasion of Ukraine.
Tracking the fallout day to day, week to week, more headlines for you. Let's turn to the Federal Reserve. Kevin Warsh's path to the chair remaining uncertain.
Kevin Warsh is uniquely ill-suited for the job as Fed chair.
I do have a disagreement, actually, Senator, with the president. I think central casting, I'd look older, grayer.
Quite adorable.
The way you can circularly go around questions and not answer them, it's a skill. Unfortunately, it's not a good skill for the chairman of the Federal Reserve Board.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No.
We're talking about Fed independence. By the way, I think you're going to be independent. You have to be. You got to convince 11 other people to vote with you. Let's get rid of this investigation so I can support your confirmation.
Can we unpack some of that? Can I just unpack that line from Senator Reid? The way you can circularly go around questions and not answer them, it's a skill. Unfortunately, it's not a good skill for the chairman of the Federal Reserve Board. It's literally what they do at the Federal Reserve. Has Senator Reid ever watched a news conference at the Federal Reserve?
That is the point of being not just Federal Reserve, being a central banker anywhere in the world. I've literally had them tell me, even sometimes for former Treasury secretaries and other individuals, say, well, sometimes we want to go out there. We don't actually want to make news. We just need to talk around things.
It's not what we'd like, but it's been a history of the Fed for a long, long time. As for the senator from Massachusetts, Kevin Warsh is uniquely ill-suited for the job as Fed chair. This is someone who called Chairman Powell a dangerous man.
Right.
Can Senator Warren tell us who she thinks should be the Fed chair?
It's interesting given the fact that Kevin Warsh, whether you like him or not, has gotten tons of warm welcomes from establishment figures, whether at the ECB or the IMF, from some Democrats and obviously all Republicans. So I'm not sure there's anyone. Maybe herself. Maybe that's who she would sign up for.
The battle continues, and you might be right. Senator Tom Tillis holding firm on blocking Warsh's nomination until the DOJ drops its criminal probe into the Federal Reserve. Bloomberg's Mike McKee was watching the whole thing, and he joins us now from Washington for more. Good morning, Mike. What are the key takeaways for you?
Well, Kevin Warsh is going to be the Fed chair, it appears, as long as the administration drops its political case against Jay Powell. He has enough support from Republicans that it doesn't really matter what Elizabeth Warren thinks at this point. Most of the people in their string of quotes there were Democrats, and Democrats kind of opposed to him. But this was really a hearing that isn't that much different from the sort of nomination hearings we've had for the past few years. Given all the controversial appointments that the president has made, we've seen a lot of criticism like that, even worse in many of the confirmation hearings. But Warsh does leave there with some questions, chief among them, as you mentioned, when does he take over? And that's going to hang over him for quite some time. And Senator Tillis made that clear yesterday, that he wants that investigation out of the way. Then the question becomes, what will Jay do? What will Jerome Powell, the Fed chair, now do if Kevin Warsh does take over, if and when he takes over? Will he stay on as a governor, and what would that mean for the Fed overall? I put this question that Elizabeth Warren put to Kevin Warsh in there, who won the 2020 election, because it does suggest that there is some hesitancy on Warsh's part to be as independent as he needs to be. And a lot of people may think about that should he advocate something that maybe the president is advocating. And then finally, when he walks in the door, does he have allies or frenemies there? He had a lot of bad things to say about the Fed. Talked about we need a new framework, new tools, new communications. We need regime change. The Fed has lost its way. How's that going to play not just with the other 18 members of the Open Market Committee, but with the staff of the Fed there? He is only one vote, even if he is the chair. Moral suasion is his one major tool. And does he lose that if he goes in there with guns blazing? We aren't sure exactly how all this is going to end up.
Mike McKee, appreciate your time. Thank you. Mike McKee down in Washington, D.C. Inflation is a choice was the key line in the opening testimony that I think we all sort of raised an eyebrow at when we first read it.
Shots fired to Team Transitory, Jay Powell and co. That basically they've been cutting interest rates and inflation has not been at their target. They moved the goalpost, I think Kevin Warsh would say, when he comes out and says inflation is a choice.
This is the take from Stephanie Roth of Wolfe Research, writing the following. Warsh struck a more hawkish tone than we had anticipated. The one notably dovish element, however, was his emphasis on trimmed mean inflation, suggesting his framework may be evolving. Stephanie joins us now for more. Stephanie, good morning.
Good morning.
It's difficult to draw big conclusions from a testimony that you know has various different audiences, and it's not just Wall Street. How are you untangling some of that?
Yeah, so we were looking through the details, right? Because you're right, there's a broad range of audience. There's Congress, there's the president, there's market participants. The point on trimming inflation, I think, was an interesting one because we haven't found in his history that that's something that he has focused on primarily. However, that is one evidence of the inflation basket that is running below core PC inflation. It's running about 2.3% year over year compared to core PC, which is running closer to 3%. So it seemed like an element of perhaps cherry-picking some of the data that aligns with the view that he ultimately want to have in order to convince the Fed to be cutting interest rates when he actually takes the office.
Which reinforces his first line, which is inflation is a choice. You just choose what you want
to look at.
Right? Seems to be the
Yeah,
takeaway.
it's true.
A focus on interest rates and not the balance sheets. This opposition to the balance sheet that I find interesting. Does he have some company on the FOMC? And ultimately, what's he trying to achieve?
Yeah, I mean, I think it's going to be a lot more modest in terms of what he actually gets done. The way he talked about it, it sounded like it would be a very gradual move. And you're starting to hear some more FOMC members talk about, potentially slightly lower balance sheet. So I think he will eventually be able to get something done from that perspective. And he made, convincing arguments about interest rates being a tool that impacts more people as opposed to market participants, which is more tied to the balance sheet. So that is something he will likely make some changes on. He'll likely make changes to communication. That was something he emphasized quite a bit. Otherwise, he's going to be faced with a tough situation because he's going to want to be cutting interest rates, and the focus on trimming inflation may not necessarily convince everybody.
He also talked about how he almost wants more of a, I wouldn't say transparent, but frank discussion amongst him and his colleagues at the Fed and not all these pre-prepared remarks when they go into the meeting room. I imagine as a market participant, that's exciting.
Yeah, it's certainly exciting. It could create a lot of more volatility around FOMC meetings because the way he made it sound is they'll be truly debating in the room, and then they'll come out with a more unanimous statement. So he was looking for fewer dissents, but more debate. And you might end up with some surprises at the end of certain FOMC meetings that could then, move markets pretty substantially.
Press conference stay or go under Warsh?
I think they stay.
What would it mean if they went, and you're a market participant?
I mean, it's a problem because you don't really get to hear the real insight into what the FOMC is thinking and get to hear their really what their framework is. And of course, he certainly does want to pull away some element of the focus in terms of media, but it seems like he's still going to probably keep the press conferences there.
There's certain elements of the post-GFC communication apparatus that needs to change. There's certain elements that we've seen officials on that Fed be frustrated with for the best part of a decade, the dot plot being one. Didn't hear much of that yesterday, but there are certain changes that I anticipate they will probably make. And it's probably about time, in the minds of a lot of people watching this programme, that they make those changes.
Yeah, I think that's right. And he made a good comment that, if you are committed to your dot plot, you might be stuck in your forecast for longer than would otherwise be the case. And as somebody who makes forecasts, I understand the idea, but you have to change.
You become married to the forecast.
Exactly, but you have to change as conditions evolve, and it's easier to do so if you are less, there's less focus on the SEP.
What are your thoughts about how he's handling the politics? This sock puppet thing keeps coming up continuously through this morning, and they're going to keep throwing that at him repeatedly in the months to come.
I mean, it was very clear he didn't answer the questions that he didn't want to answer, which was a lot of them. But I think we'll be in an environment where he will focus on independence. The question is, to what extent does he end up being more consistent with his own history of being hawkish on inflation compared to what the president wants him to get done? And that's something we don't really know yet.
That's who he still is. Do you believe that's who he is still?
I believe that's who he still is. And in his opening remarks, it was much more of a focus on inflation than the employment side of the mandate. He didn't focus on the AI narrative, which is something that he's been talking about more recently, which would be a solid argument for lower interest rates. So that was something we noted as well. I think he's still hawkish by nature.
Stephanie, appreciate it. Thank you. Stephanie Roth there of Wolfe Research, with her views on this Federal Reserve and the incoming, I think we can call him, incoming Fed Chair, Kevin Warsh. We're still waiting for that confirmation.
It's incoming. You said it the best earlier. It's not a matter of if, it's a matter of when. For me, the most important takeaway from yesterday was Senate Majority Leader John Thune basically saying, yes, the investigation into Jay Powell needs to get, and the Fed needs to get wrapped up in order for this to move forward, which says this isn't just a Senator Tom Tillis thing. This is a Republican writ large issue for the senator.
That's why there is this small chance still that it is a matter of if and not when. Just this small, small chance. I can't quite get my head around why the White House is not taking the off-ramp. That's the piece of this that makes no sense to me. You've got your guy. He's got a lot of approval, not just from Republican senators, but from establishment figures in the world of economics, lining up behind Kevin Warsh, endorsing him, supporting him. You can have him at the top of the Federal Reserve. You've got a problem with Chairman Powell? I don't want to get into that right now, but the president's got a problem with him. He will go away. There's your off-ramp. And they're not taking it.
And also, this is Congress. This is the White House. They can have other means. They can have task force looking into potentially what they would consider gross misconduct of funds when it comes to the refurbishment of the Fed. But does it rise to the standard of being a criminal probe into the Fed? That is a big question. I'm not sure why they're not taking that off-ramp. I'm not sure. It keeps getting put to the president, and he doubles down that he wants to keep this.
I saw Libby Cantrell, PIMCO, talking about the fall for confirmation, the third or fourth quarter.
So you know what that means?
It's going to be a long way.
It feels like Jay Powell forever. And maybe, if you're a conspiracy theorist, you think if this White House thinks potentially the economy maybe isn't going to hold up as well before the midterm elections, don't you want someone to blame?
Let's give you an update on news elsewhere, including the war in the Middle East, with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. We start there. An update on the Strait of Hormuz. Iran has reportedly opened fire on a third vessel in the waterway. This latest one owned by a Swiss shipping company. The Wall Street Journal reporting the ship was attacked while waiting to cross into the Gulf of Oman. It follows Iran seizing 2 other ships in the Strait earlier today that were brought back to Iran's coast for inspection. A small group of unauthorized users gaining access to Anthropic's new Mythos AI model, which the company itself warns could enable dangerous cyber attacks. According to documentation viewed by Bloomberg, the users gained access on the same day Anthropic announced a limited test release of the model. And we are seeing Alphabet shares rising 1.6% in the pre-market as a wave of headlines hit from its Google Cloud conference in Las Vegas. The tech giant announcing deeper partnerships with Salesforce and NVIDIA, which you can see there, up as well. Plus, announcing a set of tools to create AI agents and the latest generation of its in-house chip. That's your Bloomberg brief. John.
Yahara, thank you. Thanks for the update. Thanks for this morning. Up next, we'll catch up with Chris Watling of Longview Economics, with stocks rising ahead of the opening bell. And we'll take a sneak peek at the week ahead, heading into the weekend. Live from New York City, you're watching Bloomberg TV.
You've almost had complete retracement. So if you look at just that context of 2 months, you should have just stayed invested. The idea that you could have taken off any sort of investments because of this geopolitical conflict, be able to add at the wides, ride that back. I mean, nobody can be that kind of hero in this market. So that idea that you can be cute and add on weakness and buy those dips, it doesn't happen any longer.
I really enjoy catching up with Lindsay Rosner at Goldman Sachs. That was Lindsay from a little bit earlier on this morning. The difficulty of trading these headlines. Just think about how ridiculous the last 24 hours have been. Going into the close, you see these headlines about Vance not attending talks in Islamabad, talks that aren't even happening. Then after the close, 10 minutes after, the president extends the ceasefire indefinitely. And here we are, futures up by 0.6% on the S&P 500, on the Nasdaq up by 0.7%. And the anchor, I think, for a lot of people right now is to look through all the noise and just focus on one of two things. Either you're on the path to escalation or the path to de-escalation, and you see a president right now committed to the former, committed to the idea of de-escalation and not escalation.
He's committed to that idea. He said that he's willing to have this ceasefire, and he's waiting for the Iranian response. The Iranian response, basically, I think a lot of people are talking about, a lot of reporting, the president's talking about have a more cohesive response between the IRGC and the political actors, and then they'll be willing to maybe have another negotiation. But I find it fascinating that we have no deadline. Feels like the first time from this president we have this open-ended, basically, ceasefire.
Waiting for a unified response from the Iranians. He calls their leadership fractured. They are, and we'll see if we get that unified response sometime soon. As we count you down to the opening bell, some things to look out for. Tesla and IBM reporting after the close. Lisa catching up with Scott Kirby later on this morning at about 25 minutes from now, so look out for that too on the corporate side. On the data side of things, on Thursday, PMI data and another round of jobless claims. On Friday, NewEdge consumer sentiment data as well. For stocks right now, trading close to session highs going into the opening bout. Chris Watling of Longview Economics writing the case for a period of consolidation is growing. A retest, though, is not our central expectations. We recommend remaining overweight equities. Chris joins us now for more. Chris, good morning. Good to see you.
Good morning. Good to see you.
I remember in the spring of the pandemic talking about the retest, because the retest has to happen, right? And we were debating this for weeks and then months, and the market kept climbing up and to the right on the charts, and you missed it. Is that the feeling you've got now?
Well, that's such a great point, because I remember the debate very well. And I remember at the time doing an analysis of all major sort of plunges in the stock market, which weren't in bear markets, just, you know, sharp sell-offs, and how much pre-pandemic they always retested. And it was almost 90%. It was almost a given. You retest and then off you go. And, of course, since then, I think we've had 4 plunges, of sharp plunges. So I'm not talking about the 22 bear market, but the August 24 Japanese sell-off, you remember. And, of course, the banking crisis in March 23. And none of them have retested. The structure of the market, I think, has changed. And I think that's what really interests.
When you say the structure, what do you mean by that?
Well, I certainly think the retail element's changed, and there's been a lot of talk about that. But I also think the predominance of pod shops, because in the old days we used to talk about risk guys swinging the bat. You know, where's the guy to come and swing the bat on a, you know what I mean? Now I don't think those guys exist in pod shops. They're all stop loss guys. They're quant guys. So they flush at the same time. They're all out. The risk management's all over their positioning. And I've talked to a lot of global equities managers, old school, who find the behaviour of single stocks very bizarre these days. You know, something that should go down 5 goes down 15, a big cap. So I think the structure's changed because of the pod shops and the retail trading that's going on in the market.
If there's no retest, then what could there be? Just miniature pullbacks?
Well, I mean, in a sense, if the news flow really deteriorates properly, something could happen. I find this whole thing fascinating because we all know Trump wants out. But no one in the West really knows what the Iranians think. We have no idea.
But they drag their feet. We know that.
Well, we don't even know who they're talking to. I mean, and of course they don't think like the West thinks. We don't know whether the Iranians think like Hamas think, or whether they think sort of halfway between Hamas and the West. You know, it's a different mindset. But anyway, putting that to one side, I'm all for don't worry about it. But I think you might get a consolidation, or you might get a bit of a wobble back to the 200-day.
Is the market then basically saying we trust in Trump?
Well, we've just got used to Trump, haven't we? I mean, people call it TACO. I think we should rename it, but it just doesn't work very well. TAGB, Trump always gets bored. And I think that's kind of what's going on. I probably shouldn't say that on American TV, but, you know, he likes to move on, and TACO's an element of that. So... But it's the Iranians we don't know about, but I suspect the market is pricing out terrorists. That's what we're
I think you can make the case their tolerance for pain is higher than the West, given how sanctioned that country has been for as long as it has been, and the amount of pain those consumers have been under for quite some time.
Absolutely. They came under a tremendous amount of pressure during Trump 1, when it was the maximum pressure campaign, and now they're coming under a tremendous amount of pressure on Trump 2.
But it's huge tolerance, but it's also a different ideology, which is a completely different mindset that the West doesn't fully grasp.
When you think dying is winning, I've said this repeatedly, when you think dying is winning, you're not a rational actor.
Yes.
And that's the kind of people that you're dealing with in Iran.
Exactly. And I think that makes the thing a little bit more complicated. And I think that's where the market's slightly struggling. But we're clearly pricing out a lot of the tail risk, and that would be my central case.
That's the US story. Is it different when you look at Europe and European markets? Is it different when you look at Asia?
Well, look, if the US is going to go up, Europe's going to go up. And I thought what was interesting 6-9 months ago was the broadening of the global economy that started to come through. Now, that's sort of slightly put on hold. The oil price spike is really bad for Europe, so that needs to go away. But my assumption is we'll price out hikes in Europe that are into the curve for the ECB, and we'll go back to flat or maybe even cuts, and we'll resume where we were before, which is the broadening of the global recovery, at least in the West, which is good for Europe.
That's interesting, because we heard someone say on this programme earlier on this morning that actually this has set the stage for narrow leadership and for people to get comfortable with tech. Why do you see it differently?
Well, look, I like tech. We're back onto tech in the last month or so. I think you want a barbell, tech and cyclicals, because I think the markets... It's almost like we've done a gut Ukraine reaction in the interest rate futures market. You know, second round effects, inflation's a problem.
22 repeat.
Yeah, but I don't think that's the case at all. The Western consumer's pretty soggy, I think, on the whole. You know, the bottom half of the US and across Europe. So, actually, there's capacity in these economies. I don't think we'll get second round effects, so we can price out these hikes and get the cyclicals going again.
Chris, it's good to see you.
Nice
Great to see you stateside as well. It's been too long. Chris Watling there of Longview Economics. Equity futures right now in the S&P 500 still elevated, up by 0.6%. We are poised for more headlines, no doubt, through today. Whipsawed from one to the next, but ultimately there is a ceasefire, and that ceasefire has been extended.
It's been extended indefinitely. We do not have a deadline. Remember, this time yesterday, Jonathan, we were talking about whether or not the talks would take place. We know they're not taking place, which you think would be bearish for this market, but an extended of a ceasefire without a deadline, that's pretty bullish for equity markets.
Bullish for equities, bullish for crude as well, by the way.
Yeah.
Brent's still close to triple digits. Coming up tomorrow, we'll catch up with Keith Lerner of Truist, the former Trump Deputy National Security Advisor, Victoria Coates, Christina Campmany of Invesco, plus Eric Cantor of Moelis. From New York City this morning, good morning. This was Bloomberg Surveillance.